I want to give a warm welcome to everyone here and online and thank our panelists. The Pittsburgh Tax Review has been around for 22 years now. And we have been, since I joined with Tony, been trying to run a series of conversations to have a deeper conversation about tax. And this one, AI and tax law, was settled upon by our students from last year. Last year's journal put that together. So I want to thank all our panelists here. We have some great folks here in person and then online, and we'll have that panel introduced here in a minute. But I just want to thank everybody for being here. I am an AI complete novice, maybe even a Luddite, and yet I feel like I have to be in this space. I try to think about ways to bring it into the classroom, and I find great difficulty. So I'm like really looking forward to hearing this panel. I want to first introduce our Vice Dean, John Linarelli, to give some remarks before we get going. But John, if you want to come on up.
Well, good. Well, welcome to Pitt Law. It's great to see you all here today. I just wanted to say on behalf of the faculty, students, and staff here, it's my distinct pleasure to welcome you either online or here at the school for this really important symposium, which I didn't think about AI and tax law until I got your email, Phil. I was like, tax as well? It's like, oh, it's pervasive, isn't it? So, um, it's in everything. I mean, we tend to think of it just around kind of basic legal reasoning skills, but it's now everywhere. It's happening, it happened fast, it seemed to me. I mean, I think at first, I think a lot of law schools, and we were no different, I started thinking of it as an academic dean around a very negative way around cheating and academic integrity. And then I started talking to the law firms, and I'm like, no, this is something we need to train our young lawyers to deal with now for the 21st century. It's reshaping our profession. It's reshaping other industries. It's reshaping the infrastructure of our regulatory systems. I'll tell you that I'm far from an expert on tax, but I could not imagine anywhere where this transformation could be greater, particularly when you're talking about something with a lot of rules, a lot of big data, and a lot of compliance issues. I have to believe that the presence of AI in this area is going to be significant. And right now at Pitt Law, we're trying to understand that landscape for our students and trying to understand how to incorporate that more into our curriculum. We're really incredibly fortunate here, I would say, to have a really strong tax program that Tony and Phil are running. I mean, I am the advisor of one of our other journals. Huh? Oh, Alice, of course, the low income. I forget. Sorry, Alice. Alice is our experiential person, and she does the low income taxpayer clinic. And I look at our other journals and I say, gee, we need to look at the tax review as a model for how to bring in quality just to the journals. It's just excellent. And I want to thank everyone who's been involved in organizing this as well. Amy is here. She always does a great job in organizing this. And thanks for coming. And I look forward to hearing great things today. Thank you.
So this first panel is going to look at AI and tax administration, and you have some great speakers. But I want to introduce first Nina Olson, who moderates the panel. She is online, couldn't make it with all the shutdown stuff. There have been a lot of things going on in DC, as you might imagine. Nina is an exceptional person within tax. I don't want to say too much here, but Nina is the reason in a way. I mean, she is the original taxpayer advocate, as I think of it, and was a big part of creating that position in '98, excuse me, with the Restructuring and Reform Act of the IRS. So we have an exceptional person who's been thinking about tax in so many ways and has a deep knowledge of tax administration, probably more than most people will ever know about tax law. So I want to go ahead and we're turning it over to Nina, I think a little bit early, but I think we can get going and have the panel start up. So Nina, if you want to take it away, I would appreciate it. Thank you so much for being here with us today.
Well, thank you for inviting me, and I'm so sorry I can't be here. And I think that this panel is just got this lineup of incredible human beings to speak on this issue. So I'm just going to introduce them. I will warn everybody that I'll probably be an active moderator because I have a lot of thoughts on this subject too. But I think the organization is going to be that everybody's going to talk for 20 minutes, and then there will be time for a really good dialogue between everybody. The topic is artificial intelligence and tax administration, which is really huge. But we have four different perspectives on it that I think build on one another. We're going to start with Kathleen Thomas from UNC Law, who's going to talk about her title is Tax in the Echo Chamber, but it's really looking at social tax and social media and people's perceptions, how they learn. Then we're going to move on to Sarah Losky, who's online as well. And Sarah's going to talk about direct file and coding law versus coding forms. Then we will move to Emily Welk from the Bipartisan Policy Center, and she's going to talk about responsible AI and the role of human in the loop. And then we'll move to Caroline Bruckner and Colin Coyle, and they're from American University, and they're going to talk about, basically trust in artificial intelligence in the context of tax administration. So without any further, you don't need to hear anything from me. I think we just want to start with Kathleen talking about tax in the echo chamber. Kathleen?
Should I flip through these? There we go. Good morning. Thank you, Nina. We're sorry not to see you in person, but thank you for that very lovely introduction. And thanks again to the organizers. Thanks to Phil and Tony and to the students as well for picking this topic, which is very near and dear to my heart. I was excited to write a paper for this symposium. And Phil, you told me we could interpret it as broadly as we wanted. So I hope I didn't interpret it too broadly, but I took it in a direction I wanted to sort of think more about. And so as Nina mentioned, the issue that the paper is about is how do people learn about the tax system through social media. And so sort of as a baseline starting point of background information, we should know that a very significant number of taxpayers, and it won't surprise you to know, particularly younger taxpayers, Gen Z, millennials, get tax information and tax advice from social media. So not just financial information, but tax specifically. And I'd be curious what our students think about this and if that sort of rings true to them. So to set up what I think is the problem I'm trying to identify, there's a couple avenues of background I'm going to walk you all through first in the presentation, and then we'll talk about the main issue. So the first piece of background is just understanding how the business model works for social media platforms, because what I'm going to argue is it's their business model, their revenue model that sort of drives this whole issue as I see it. So social media platforms operate with what is called sometimes a multi-sided business model. Picture Facebook, right? Two sets of customers. On the one hand are us, the individual consumers that use the platform, and we don't pay for the platform. We use it for free. That's one side of the transaction. On the other side of the transaction is where all the revenue's coming from, and that's the advertising companies. So over 90% of the revenues is coming from ads, and the advertisers pay money for Facebook or whatever the platform is to place these digital ads. And again, we use it for free. The money comes from the advertiser, right? Lots of digital platforms use this free use multi-sided platform model. So like Google is free also, but not all digital platforms are social media. So just to sort of hone in on exactly what I'm talking about, when I'm talking about social media platforms, experts basically say they have three characteristics. One is the multi-sided business model that I just mentioned. Two is that most of the content is generated by the users themselves, right? So when I go on TikTok, most of what I see is just videos created by other users other than the advertisements, right? And then third, and this is the important one for purposes of this discussion, is that the content that I see is curated by a machine learning algorithm. And this is the tie-in to AI here in my sort of loose interpretation of AI and tax administration, is that the social media platforms are using machine learning algorithms to choose the content for each user, right? And so again, the platforms I have in mind, the biggest by revenue here are Facebook, TikTok, Instagram, and YouTube. Okay, so last kind of key feature of the platforms, they make money the more time we spend on the platform, right? And that's sort of driven by how the ads are priced. They're not priced as like a fixed fee by the advertising with the advertising companies. The social media platforms get paid when we see ads or view ads. So the pricing is generally per click. How many times does somebody click on the ad, and per impression? Impressions means how many times does the ad show up in the user's feed when they're scrolling through the platform. And the reason I'm kind of focusing on this revenue model is because it is in the interest of the platforms to keep us on the platform as long as possible, because that's how they make money. They make money when we're seeing the ads, and that drives these machine learning algorithms, which I'm going to talk about next. So that's kind of why we need to understand the economics. So because the platforms make money, the more time we spend on them, they are specifically designed to keep people engaged, we could even say addicted, make it really hard to put down, right? And they do that through a few different features. The first here on the slide is the most important, and this is sort of key to the whole topic and the paper I wrote, which is that the content we see, each user, is curated specifically by a machine learning algorithm. So when let's keep using TikTok as an example and see videos, right? When I go on TikTok, I see a feed that's very different than the feed that Caroline sees when she goes on TikTok, because the machine learning algorithm is trying to predict what each one of us would be interested in seeing. And the algorithms do a couple things. They score videos based on engagement. And engagement means how much are people watching it? How long are they playing the video? Are they scrolling past or watching the same thing or watching the whole thing? Are they liking it? Are they sharing it? Are they, commenting on it? So they score which videos have really high engagement. And the machine learning algorithm also tracks what I individually tend to do on the platform. What do I tend to like? What do I tend to share? And then it predicts what videos are going to be interesting to me. And that's what I'm going to see in my feed. And you're going to see something different. And again, the whole function of this is to keep me, the individual user, engaged and interested so that I'll be on the platform longer and see more ads and they will get paid more, right? Connected to the use of machine learning algorithms is this concept of an endless feed. And if you're on social media, you're familiar with this. It's the idea that I can scroll and scroll and I will never stop seeing content. It will continuously produce, videos or pictures or whatever it is for me. No natural stopping point. Psychologists have observed this kind of creates a flow state, which again tends to make it a bit addictive. And, again, if you use the platforms, you're familiar with this, and can be hard to put down because of the endless feed. Sort of less relevant to this topic, but worth mentioning, are a couple other features the platforms use to maximize engagement. Social feedback is things like likes or comments. So I post a picture and then I want to see how many likes and comments I get. And psychologists have measured brain activity. We get like a dopamine hit that keeps us coming back every time our picture gets a like. And then connected with that, of course, are notifications. My phone's going to ping or buzz and tell me that I have another like, and it's all meant to just keep me coming back to the app. Okay, so that's the background on just the social media piece. Let me say a quick word about echo chambers, and then I'm going to sort of tie these together for purposes of the paper. We all know what an echo chamber is, I think, conceptually, right? Just the idea that we're going to, or that we tend to, I should say, surround ourselves with like-minded people that think the same stuff we do. We kind of reflect the same ideas back to each other over and over again. This is a very natural tendency. Over a decade ago, Cass Sunstein started writing about this. And what he was warning about, or has been warning about, I should say, is the danger that the internet and particularly social media creates in kind of reinforcing echo chambers. And so I just want to read this quote from his book, #Republic, that he wrote in 2017. He says, "It seems plain that the internet is serving for many as a breeding ground for extremism, precisely because like-minded people are connecting with greater ease and frequency with one another, and often without hearing contrary views. Repeated exposure to an extreme position with the suggestion that many people hold it will predictably move those exposed and likely predisposed to believe in it," right? So Sunstein was worried, I think rightly so, that the internet and social media particularly are kind of allowing us to more and more connect with like-minded people in these echo chambers. What I'm sort of trying to draw out in this paper, and other social scientists, I should say, have drawn out, is social media platforms, particularly the use of machine learning algorithms, have added something new to this idea of an echo chamber. Because now we're not just surrounding ourselves in echo chambers of people who think like us, but rather we're in this sort of echo chamber where it's a machine learning algorithm creating the content we see over and over again that tends to be very one-sided, which is a different sort of echo chamber. Some experts call this a filter bubble, a social media filter bubble. So we could think of filter bubbles as a type of echo chamber. I think of it as a sort of subset of echo chambers. And I want to read you this quote in a paper by two social scientists who've written extensively and researched social media filter bubbles. Social media users are mostly exposed to ideologically aligned content in their newsfeed as a result of the platform's algorithmic selection of content based on users' past behavior. So it's an echo chamber in the sense that it's kind of the same ideas, reinforcing the same ideas, maybe leading to more extreme views, but not just of people, but of algorithms selecting the content for us. And I liked this quote: "What's in your filter bubble depends on who you are and it depends on what you do, but you don't decide what gets in. And more importantly, you don't actually see what gets edited out." So if we step back and think about the dangers potentially of these social media filter bubbles, and there's a fair amount of scholarship on this, not so much in the tax context, but just in general, I've separated these into general and specific concerns. The general concerns, I think, are just the concerns that Sunstein has expressed that apply to echo chambers in general. So we should always, I think, be concerned about echo chambers because they tend to create polarization. They can sort of foster extremism and lack of healthy debate, deliberation. This can sort of, threaten democracy, right? Specifically to filter bubbles, though, social media filter bubbles, I think we see additional concerns that kind of move a step beyond what Sunstein was initially concerned about. One is that they operate on more of an unconscious level. So there's been some good, interesting empirical studies on whether people are aware of the fact that they're seeing pretty one-sided content in social media filter bubbles, and they're generally not. And that's partly because the way these platforms are designed, again, the endless feed, the state of flow, is to get us operating a bit on an unconscious level, to make it hard for us to put it down, hard for us to stop. So studies show people are not very aware of how potentially one-sided the content they're seeing is, so perhaps more unconscious even than just your standard echo chamber of people. Algorithms are going to show us things we didn't necessarily think we were interested in or know we were looking for based on predictions that might lead to different views that we hadn't actually been seeking out. And this last point, I think, is the most important, which is that the algorithms select content based on engagement, meaning how much am I likely to watch it and be interested in it, which could be for a lot of reasons. It could be because it's very provocative. It could be because it's very extreme, but not necessarily because it's relevant or because it's true. That's what drives selection of these algorithms. Okay, let's tie this into tax. Why does this matter for the tax law? That's the point of this paper. Let's talk about where we come to social media as a baseline matter. Probably everybody in this room is aware of the fact that overall tax literacy in the US is pretty low. There's dozens of studies, very recent studies included, showing that lots of people lack baseline tax information. So people come to social media without a lot of baseline knowledge. And then, as we already talked about at the very beginning of the presentation, a really large group of individuals, particularly younger individuals, but I have to say the numbers are even surprising for older generations. At Gen X, I had to look, still over 50% of people looking at social media, at least from time to time, for tax information and other financial information, right? And we know the Taxpayer Advocate Service, the IRS have been warning for years. There's lots of bad information, both on the internet in general, but on social media, including tax information, right? So there's been years of the IRS and Taxpayer Advocate Service warning about tax scams. People who get wrong information online might only not comply, which is a major issue, right? But they might fail to claim benefits that they're eligible for. So all kinds of reasons that are probably intuitive. We don't want people getting incorrect information on social media. In a way, this is sort of not a new problem I'm talking about, right? So some years ago, I wrote a paper called Fake News and the Tax Law with Aaron Scharf at Arizona State. And we looked at just all kinds of bad tax information that was just on the internet, like news stories on the internet. We weren't really talking or thinking back then about social media algorithms. So in the one sense, this is not a new problem that people are getting bad information online. What I'm trying to do in this paper is sort of hone in on the algorithmic content selection of the social media platforms and argue that this just makes things even worse, that these things exacerbate tax illiteracy and false tax information for a few reasons. One, social media platforms by their nature are such that anybody can make the content, right? So TikTok, I learned when I was writing this paper, is just full of videos of people who are not tax experts giving tax advice, posting tax videos, right? And some of it is good advice, tends to be from CPAs who make videos, but a lot of it, I won't surprise you, is bad advice. Again, I just can't say this point enough because I think it's the most important point. The content is selected by the algorithms and likely to show up in my feed based on engagement. How much is someone just willing to watch it and be interested in it, which could be for a whole bunch of reasons that don't involve it being good advice. And then sort of the problem of the filter bubble is the content is self-reinforcing. So if I am somebody who likes to go on TikTok and watch videos about, someone posts a video saying that it's a myth that you have to pay the US income tax. You've seen these ones where it's like, point to me a place in the code, which like we all can point to places in the code, or someone says, point to me a place that shows I have an obligation to pay tax. If I'm someone who's drawn to those videos, I'm just going to see more and more and more of that content. Same with like, I'm just looking for advice, but I want to see like an aggressive take on a deduction or a tax position. The more of that content I engage with, the more I'm going to see. And the illusory truth effect, psychological phenomenon, says the more I see the same thing over and over again, the more likely it is I think it's true. Obviously, the filter bubbles can work in both directions. If I'm somebody that's really interested in good, legit tax advice, my feed is probably going to be full of that type of advice, but we're going to have different people seeing wildly different things. And that's the issue I'm trying to identify specifically here in tax in the echo chamber. And again, to repeat something I already said, people can be sort of shifted towards even more extreme positions or ideas because then they see content they weren't even searching for because the algorithm predicts, hey, we think you might like this too. Okay, so I did a case study as I wrote this paper over the summer, and I want to be very careful to call this nothing more than an illustrative case study. It's by no means an empirical study, as will be very clear to you when I describe it to you. And the paper is online, so if you're interested in seeing more about it, I'm just going to try to be brief to talk about it. I'm not really on TikTok, but it seemed like a lot of tax stuff is going on TikTok. So over the summer, I created these two TikTok accounts. And I trained each account so that the algorithm would predict the accounts had different preferences. And I did this solely on political affiliation, only as because it was a place I could easily draw a line. So I had the first account like any video about President, sort of favorable to Republicans or President Trump. And I had the other account like any video, either criticizing Republicans or favorable to Biden or Democrats. And I'll just say as a caveat, I wasn't trying to draw any conclusions about political parties. In that earlier paper I wrote with Aaron Scharf on fake news in the tax law, we certainly found that fake tax news spans both ends of the political spectrum. So I think there are no conclusions to be drawn that one political affiliation, versus the other is sort of more susceptible to filter bubbles or false information. Again, for me, this was just an easy, clean way to draw a line and make the account think the accounts, that they had different preferences. So I trained the accounts by just kind of scrolling and watching videos for about 10 minutes, 3 different times over the course of a week. That was it. That was all I did. I have to say, I thought this would be fun. And I found it like excruciating and terrible because I wanted to like scroll past and not watch the videos, but I was like, oh, I have to play the whole video. So the algorithm like thinks I'm interested. And I went to my kids and I was like, I don't know what you're doing on TikTok, but I find this very boring. But maybe it was maybe it was the content. So after I had trained these 2 accounts, then I just did a search for the word taxes. There's a search bar on TikTok. I just put in the word taxes just to see what would happen. And sure enough, I got completely different results in each account just from those 3 sessions. So it's kind of small and I'm not going to spend time going through all the results. They're in the paper if you're interested. Just if you're curious, like the top result in the first account was a video talking about how to avoid 100% of your income taxes. Are you wondering how? It's apparently that you buy an investment property and shelter all your income with your deductions in a world where there's no passive activity loss rules. And so that's the trick. And then the other account, the top result was one talking about how like you shouldn't use TurboTax and it's corrupt and use another software. So these are both videos. There was some overlap in the results, but ranked differently, but most of the videos were completely independent. I do a little bit of discussion in the paper, like, hey, the account 1 videos kind of trend this way and the account 2 videos kind of trend towards these topics. But I don't want to go so far. Again, it's not an empirical study. It was really just to help me understand how quickly and easily sort of a completely different set of results could pop up for 2 different TikTok users. Then just by way of comparison, I did a Google search for the same word taxes, and notice I just get a list of websites. The IRS being the first website. That sounds right to me. Google is paying attention to where I'm located, right? So it does give me the North Carolina DOR as the second result, and you would have gotten something else. And, I did this search in August, maybe you'd get something else today. But generally, I would expect our Google search results to look a lot more similar. Google is scoring mostly on relevance, non-engagement, right? Unlike the social media algorithms. Okay, let me sort of tie this all in. What are the implications here for tax administration? So, I just see a couple of problems. I'm going to say the second bullet first, and we already really said this. My biggest concern is that these algorithms are just reinforcing ideas and content in a filter bubble for some groups, and other groups, right, who are looking for different types of advice are seeing something different. And if we're worried about people getting bad information or against sort of aggressive positions, it's just more of that. And coupled with that, I think is a particular administrative challenge, because I'm sure many of us have thought about this issue of how does government, how does the IRS, how's the taxpayer advocate combat bad tax information? We're kind of always chasing it, right? Putting out a press release, IRS does its own social media campaign saying like, don't fall for this tax scam. I think those things are important, but I think the challenge here is the very users we're probably trying to reach might be in filter bubbles that are going to screen that information right out, because it's going to predict this person is not interested in that kind of information. If it's not getting a lot of engagement, it's not going to show up in anyone's feed, right? So that I think is the particular challenge with these machine learning algorithms. Last, of course, like what should we do? I welcome anyone's ideas because I don't have any big solutions here. Seems highly unlikely we would convince the platforms to change the algorithms because, as said at the beginning, kind of the whole business model is driven by this, right? Idea of engagement. And again, that's unique to social media versus other types of digital platforms we engage with. I would argue my best hope in my mind is tax literacy, right? Really just like promoting tax literacy early on. I think the more baseline tax knowledge taxpayers, especially young taxpayers, bring to their use of social media. Are you reading the parallelogram one? Yeah. That just says it though, right? My students love this. I've had a bunch of students send it to me, but so true, right? But I do think the more baseline knowledge people bring to social media, the better, right? I think the best chance of sort of not having people led astray by scams or even bad information is having good baseline knowledge to begin with. Otherwise, I don't have a great solution, but I'd welcome your ideas. Thank you. Oh, and there's a link to the paper if you are interested in reading about the rest of the results of the rest of the case study.
Thank you, Kathleen. That's just a lot to think about, and I'm looking forward to people's conversations on this. Now we'll move to Sarah, who's going to talk about direct file. Sarah?
Great, thank you so much. So I am going to go ahead and I'm going to need to share my screen, I believe, if someone can set that up. All right, but if not, that will be fine. Okay, great. Okay, excellent. So I know this is a panel. I know this is about tax and AI, but my presentation is going to be about explaining why something isn't AI, which I actually think is also important for that to sort of be clear. So let me take a step back and explain the general scenario. AI is, I think when people talk about AI, they're talking largely at this point usually about large language models that are generating, I mean, this is very loose, oftentimes they're talking about generative AI that's generating language and that's non-deterministic, maybe created by a lot of input of this, like we know that the AI programs collect information from all over the place and then process it and then return something that is non-deterministic. And sometimes people think that that's what's going on with, maybe we have tax AI because we have these tax preparation programs. So that's not the case at all. But I want to talk about another option other than this kind of large language model or taking in a lot of information, which is formalization of the law. Formalizing the law, it's kind of on the opposite end of the spectrum, computer-wise, from what I think folks are calling AI. So to formalize the law is to represent the law in symbols. And our tax law is definitely formalized. Tax forms are formalizations of the law because they take statutory language and they reduce them and compress them into algorithms or formulas. And really, it's actually impossible to imagine how tax administration could even work in a tax system as complicated as that in most modern countries without formalization of some kind, forms, e-filing, other types of administrative computer programs. So one thing that researchers have been working towards is a flexible formalization of the tax law, a formalization of the statute that could be used for various purposes, including but not limited to tax administration, refining legislation, finding and shutting down tax shelters. And how do we do this? People do it, formalize the tax law through human effort. But it's really, really time consuming to do this, but I think has big payoff. So anecdotally, anyone who's kind of worked in this area has, I'm sure, had this experience, which is you describe this and then somebody says, how hard can this be? Hasn't TurboTax already done this? And well, no, that seemed very, very unlikely, but we didn't have access to what was going on in TurboTax. But then something really exciting happened. Direct File is a computer program that was created by the United States government that allowed some taxpayers to file their federal income tax returns online for free. And it was piloted during the 2024 tax season, and it was available. So file your returns in 24 for 23, and it was available for now, file returns in 25 for 24. But its status for future tax seasons is uncertain. And in June of this year, a totally amazing thing happened, which was the IRS released all of the computer code for Direct File, with very few exceptions. Personally identifiable information was omitted, but basically all of it. So now we have this incredible opportunity, which is to see what is the program that is being used when people are e-filing. And almost everybody's e-filing, right? Well over 90% of individual returns are e-file. So what do we see? Well, we can look at Direct File, we'll look at the code, and that's what I did, and that's what this presentation is about. And we see two things. One is Direct File codes forms, not law. And the other thing is it massively increases transparency. Now, I want to be really clear that when I say Direct File encodes forms, not law, this makes perfect sense. The purpose of the program is to file forms. It would be really strange if you short-circuited that in any way. So this is in no way whatsoever a criticism. This is like, of course, what I would have expected to see, but now we can really see it, and we can see some really specific things. So let me just say a little bit more about Direct File. Direct File was created by a blended team from the US government, included people from the IRS and included people from something called 18F, which was this incredible team of programmers within the General Services Administration that helped folks all over the government with various technology projects, and also outside contractors. The team included programmers and subject matter experts. It was human generated. And the team prioritized user experience and a human-centered approach and designed this program so it could be used by a wide range of people. It was limited in terms of the taxpayer characteristics. You had to have only wages, a little bit of interest, and certain kinds of benefits. You could only take a very limited number of deductions. It was only for 12 pilot states. So in that way, it was limited. But in terms of the individuals, they designed it with all kinds of individuals in mind. And the taxpayers generally had an extremely positive experience with Direct File, with 90% of respondents finding that it was either excellent or above average experience. They found it easy to use. They found it trustworthy. And critically, Direct File also included responsive and knowledgeable customer support, including live chat and in-person calls. So the rest of this time, I want to talk about the computer code underlying Direct File as posted by the Internal Revenue Service. But I do want to say that Direct File also, or maybe primarily, creates an interface in the very broadest sense between the taxpayer and the tax form. And that interface is largely what determines the taxpayer's experience and the taxpayer's success at using Direct File. And the care and expertise with which the team created this interface is evidenced throughout the computer code that you can see. It's described in great detail. I'm not going to talk about that today, but really the incredible work they put in there and the user interface aspect of this really deserves its own discussion and really its own celebration. All right. So with the computer code for Direct File available, we can see that Direct File is not coding the law. It is not, when I mean by the law, I mean US code and accompanying regulations. It's coding informal guidance. It's coding publications and forms. And that's what the description, I mean, it's right in the description, the repository where they store all the code says, how do we design the flow of questions? And the answer that they give is, we have to answer all these questions. And they say, to do this, we consult relevant IRS publications and partner with IRS General Counsel to understand all the information we need. And the information that they're looking for is information from the forms. So the designers rely on forums and publications and to some extent general counsel to determine what questions to ask to obtain the necessary inputs. Again, exactly as one would expect. But informal guidance, such as forums and publications, do not have force of law. Taxpayers can't rely on informal guidance to avoid penalties. And as Josh Blank and Leo Sofsky have described, publications do not always report the law accurately. And they have explained, and this is a quote from their article, Simplexity, informal guidance creates seemingly simple statements that present contested tax law as clear tax rules, add administrative gloss to the tax law, and fail to fully explain the tax law, including possible exceptions. And forms themselves can deviate from the law, sometimes substantively deviate from the law. So this is not to suggest that the direct file program deviates from the law in a way that would imperil filers, or that the direct file program is more of a deviation from the law than the usual forms. It's not. It exactly is pulling the forms and the publications. And direct file also worked with subject matter experts from the IRS and Treasury, and the workflow is formally reviewed by the Chief Counsel's office. But again, informal guidance is also generally reviewed by lawyers within the IRS. So this review doesn't mean that the computer code itself is consistent with the actual law as opposed to the informal guidance. And we can also see this in the computer code itself. So let me just jump ahead here. All right, so let's think about the calculation of tax. This is the tentative tax as reported. So this, as I think everyone here will recognize this table from revenue procedure. You may not look at this and say, oh yeah, that's 2023-48, but you'll all recognize the table from the revenue procedure. This is how the statute also says to calculate the tax. If your taxable income is here, you take this, you add 12% of the excess. All right. But that is not actually how tax is calculated on the forms for people within a certain range. People who make less than $100,000 are supposed to use the tax tables to calculate their forms. And this is a like sample table, and you can see that there. It says if your income, and they does it in $50 chunks, and it says if your income is within this chunk, with this $50 range, and this is your filing status, then this is the tax that you owe. So actually, calculating tax this way and calculating tax using the tax table gives different answers, as one would expect, because the tax table goes in $50 chunks and this goes in $1 chunks. So yes, we would expect to see different answers. There is not a problem with this. This is not a critique. This is just a description of the way that they have simplified the code. And now if we looked at the direct file code, this is drawn from direct file, we can actually see that direct file code follows the rounding approach of the forms worksheet. So for taxpayers learning less than $100,000, we can see that the direct file determines the tax based on the midpoint of the range. So this follows the publication, but doesn't follow the Internal Revenue Code. At the same time, the direct file code actually doesn't always track informal guidance as opposed to the statute. So it doesn't actually have the tax table in there. It actually calculates the midpoint of the $50 range and then calculates the tax based on the formula from the revenue procedure with that midpoint as the relevant taxable income. The worksheet would have the taxpayers do no calculation at all. And interestingly, the direct file code also uses the revenue procedure formula for taxpayers earning $100,000 or more. But interestingly, even that is not consistent with the form and instructions. It's consistent with the statute. because I will not get into the weeds of this, but I do find this completely fascinating. What the form tells you to do to calculate your tax is to multiply your taxable income by your full taxable income by your marginal rate and then subtract a number. And what the statute tells you to do is subtract your marginal income from the top of the bottom bracket, multiply by the marginal rate, and then add a number. So they're totally consistent. The formulas are consistent, but they are different, which is interesting. And maybe it's a different discussion. Well, I'll just mention this now. I actually don't think it's totally, not that anybody sees those formulas anymore, but I don't think it's totally neutral. If I was using the formula in the form of multiply my entire income by my marginal taxable rate and subtract a number, that might very well lead me to believe, if I didn't know a lot about tax, that all of my income was being taxed at the marginal rate. It's clearly not, because you're subtracting a number, but like you're not thinking that hard about it. So I think there's actually, there is an argument that that formula is, although the outcome is misleading, is communicating something different. All right, so, and I think the tension there is that the IRS I mean, I love the forms. They're really incredible. The IRS is looking for the most efficient calculation, and the way that they do it is one multiplication and one subtraction, and the way that the statute does it is a subtraction, a multiplication, and an addition. So they've actually gotten it down to two calculations, but I think it also maybe arguably is misleading. All right, so all of this is to say that direct file is coding the forms, and we can see this in other examples as well. It's not coding the law itself, and it's not coding it in a flexible way that can be used for other things. However, as you can see from what I've been saying and what I've shown you here, is it's still different from the forms because it is more transparent than the forms. And this really addresses a significant concern with informal guidance that Blake and Osofsky have talked about extensively. So like nowhere in the form or publication is there an explanation of this midpoint calculation. This is really just what it says. It says you have to use this table. Find your range and look it up. But within the direct file code, we can actually, it tells you what it's doing. It tells you what it's doing in two ways. There's a type of communication called a description. And you can see here, it says, it tells you for income less than 100,000 uses the tax tables, got it. But then it says, this fact selects the midpoint that corresponds to each entry in the tax tables for use in calculating the tentative tax. That's more than the form tells me. And then here we actually have comments, which are like descriptions. They're not actually calculations. They're just communications to the humans that are reading the code. The computer doesn't do anything with this. And it says, take $50, you're rounding, what this tells you to do is tells you to round down, and then you add 25 to get to the midpoint. So it's telling me the exact calculation that's being used. So not only does the computer code, if I read through the code, I can see it tells me what to do. It says stepwise this and all of that. But there are comments that also make clear what it is telling you to do. So the code is much, it is, so what do we learn from this? A few things. One is that, one thing we learn is that no, it's not, it is not formalizing the law in a way that would mean that we don't have work to do, or it hasn't gotten us partway there. It's taking the forms, and the forms are informal guidance, the forms and the publications and the worksheets. That's what it's using. That's informal guidance. It isn't the law. At the same time, sometimes it's kind of mix and matching, which is very interesting. But even more importantly, the computer code is providing us with transparency, both by letting us walk through the steps ourselves and by the incredible way that this team, which explicitly says that transparency is one of its goals, has provided these extensive descriptions and comments that tell us exactly what is happening on these forms. So they had to figure out what was really happening, even though the forms and worksheets don't tell them what's happening. They figured it out because they had to implement it, and now they communicate it to us. So that's what we see in direct file. So what's the takeaway? It's not AI. It's incredibly valuable. It's not AI. It's encoding mostly forms and publications and not the law, and it is a huge step forward in terms of transparency. All right, thank you very much.
Thank you, Sarah. And I just have to say, in late September, I attended a 2-day conference with the programmers of Direct File and a whole bunch of people that worked on the product. And it was really extraordinary to see the process that they went through. And I think this kind of goes to a little bit, about the human in the loop conversation, which is going to be our next presentation. But partly some of what it was with all the folks from US Digital Services and everybody, they weren't tax experts. So some of the process was they were explaining it to themselves. And then they were saying, okay, then how do we make this clear to others? And I think that step where you have to do your own explanation to yourself is key then to transparency. And it's also key to identifying the gray areas, which goes to Lee and Josh's work about where you're simplifying too much and where where you might have to deviate from the forms, or at least identify that this is the form's position, but it's not the only position.
And if I could just add one thing, which is that I completely agree with everything you said. And I would just add that even for those of us who are tax experts, I believe it is non-obvious from the forms when certain things are happening. Like, I don't think if you pulled a tax expert off the street, they'd be able to tell you immediately. They would know that the calculation for the tax must be the same, but they would not be able to immediately tell you why. And it might take a while for them to explain it. They might not immediately understand that they were looking at the midpoint. Like, I agree that tax law is obscure to non-experts, but I think some of the things that happen in the forms are so condensed that they are obscure to experts as well. Mm-hmm. And by having to understand them to implement them, that way the team is able to clarify not just for those who don't understand, but even for those who thought that they did understand.
Mm-hmm. Really wonderful. So thank you. So with that, let's move to Emily talking about human in the loop.
Here in the room. Perfect. Well, thank you so much for, the first two presentations. They were extremely helpful. And I will just sort of say from the outset that I come at this from a sort of a different lens, not really through the tax law lens or the academia lens. I work at the Bipartisan Policy Center, so all of our research is really focused at how can we unpack some of these really complex issues and help members of Congress understand what's going on, what changes are needed, and how to ensure that they're executed responsibly and effectively to ensure that tax policies are simplified and easy for the taxpayer to understand, but also that when there's responsibilities and guardrails on the Internal Revenue Service and Treasury to ensure that it's deployed, that the compliance process is deployed responsibly as well. And so coming into this conversation, I thought it was really helpful at the end there to talk about, the importance of humans sort of having to understand and explain the code to themselves to ensure that they're deploying it accurately, and that humans are such an integral part to this process. I think there's a real sense right now on Capitol Hill that AI is sort of the answer to reducing the workforce, replacing some of the human positions in these different agencies and expediting and automating processes. So much so that there's not really this need for sort of that human touch and sort of human interpretation of some of these really complex laws and regulations, right? They feel that there is a sense that all of these processes can be automated, simplified in a way that there's no need to understand that nuance and complexity that does come through the tax compliance process, as well as the tax filing process. And so our kind of perspective at the Bipartisan Policy Center is that AI can and truly should be a powerful tool for public good, but that right now we're really in a system that's a balance of risk and reward. And policymakers, experts, and the public sort of need to fully understand and be educated on what's going on. So again, kind of learning how to sift through information, understanding those filters, and understand how this information should be communicated, what is correct, and how to sort of responsibly deploy AI before we kind of move towards a system that's fully regulated, but also knowing those guardrails are extremely important to protecting taxpayers' privacy and security of the data in these systems. And so a lot of what we have started to look at over the last year is really how AI is already being deployed, and I think deployed in ways that a lot of members of Congress right now don't even know in the Internal Revenue Service, and that there's a lot of ways it's already been integrated into sort of the tax filing process, as Sarah sort of pointed out with the direct file, but also just chatbots. If you go to the IRS website and have a question about how to, answer something on your tax form, like AI is already steeped in these agencies. And members of Congress are 10 steps behind in understanding how that's working and how that's operating. And they are then trying to legislate regulations on top of it without even fully understanding what's going on to begin with. And so I think in this, talk, I really want to point out sort of some of those use cases, what's already going on in the Internal Revenue Service and Treasury to deploy AI in these different sort of instances, but also what are some of those risks and pitfalls, and kind of where can we look to other examples of where things have not gone well to date, and kind of learn from that and understand like where humans and this oversight from an outside, entity is really important to ensuring the longevity of AI in the tax administration process, as well as sort of, I think as much as there's the regulations and oversight, all of this is politicized in Washington, D.C. And I think that is just another facet of the conversation that is really shifting how these agencies are even able to deploy AI over different administrations and kind of create consistent policies over time. And I do think a lot of this is going to be a higher level than some of the other research that's been presented today, but I think a lot of it's really going to tee up Caroline and Colin's next presentation too. So hopefully we can kind of see some through lines there. And so sort of the next place I really wanted to go into is some of the recent executive orders and legislative and executive actions around AI through the last two administrations that have, I think, really set up where we're going to be going from today. And I think we saw the IRS kind of turn to a lot more technological modernization efforts following the Inflation Reduction Act and that infusions of funds that allowed them to really improve their data infrastructure, their data management systems, and enhance operations and innovations across the board. So I think 2022 is where we saw that infusion of funds that allowed us to kind of get to where we are today. And then we also saw the Biden administration issue an executive order that introduced these guardrails that were focused on privacy, civil rights, and worker protections within the deployment of AI across different agencies, trying to lay the groundwork for federal AI governance. That was immediately rescinded as soon as the Trump administration came into office, and they swiftly kind of issued their own guidance and executive order that prioritized AI innovation over sort of these federal barriers and regulations to slow down how quickly AI could be deployed in these systems. And so I think these constant shifts over these last couple of administrations, and especially really over the last kind of 3 years of these two administrations, has made it really challenging for agencies to implement AI, because every time, they have a system in place, they have to go back, reassess all of those guidelines and regulations that they've put in place. They're changing their sort of chief AI officers who are responsible for deploying those technologies. And it's slowing down the rate at which AI can be used. It's also slowing down the oversight of the AI that's already in place. So there's not a lot of understanding right now as whether or not the way AI is being used in the IRS is actually in compliance with these recent guidelines and EOs. And so this really just creates a tension and sort of a push-pull between whether or not we really want to move towards this world of innovation and kind of balancing that with the regulation that's needed to protect those taxpayer privacy rights, and just ensure that the data is secure and protected when it's being used in these systems. And I think that's something, as we're thinking about good governance around AI, that we want to make sure that members of Congress who are writing these laws and the administration who's putting out these executive orders actually understand that tension and how to balance that in the way that they are legislating. And so I think the other sort of facet of humans in the loop is that the piece of the federal workforce is changing immensely at the moment, right? We're seeing a lot of reductions in force across different agencies. Right now, we're in the middle of what are we on? Week 3 of the government shutdown. We're, over 35,000 employees right now are currently furloughed from the IRS. And we are 5 months out from tax season, not even 5 months. We are 3 months out from tax season. And those reductions in staff, we've seen a 25% reduction in IRS staff since the start of the Trump administration. We've seen those additional 35,000 employees furloughed, poses real challenges for tax season and kind of poses real challenges for, as these changes are happening, having enough workers to ensure that they're being implemented responsibly and that they're understanding, not even just how to implement the changes from this recent reconciliation package that, a lot of different changes to the individual and business side of the tax code, many of them extensions from TCJA, but a lot of new policies that are needed to be implemented swiftly in advance of this tax season, but that there's a sense within the Treasury Department right now that they can rely on the technology to help them do that efficiently and effectively, and the reduction in staff is not going to be as big of a concern as the public feels. And I think we in the policy world in DC are not necessarily sold on that being the case, that you can't just deploy the technology without having, workers, humans on site who understand how to utilize the technology, assess it for flags, and understand the, impacts of what those outputs are saying. And I think helping members of Congress understand how IRS is already using AI and where the humans are really integral to that process will hopefully help them understand how to implement policies that safeguard those protections for taxpayers, ensure that there's always human oversight and checks throughout the system, even if the AI is actually helping to make it more efficient and automated and improve the processes across the board. And so now I'm going to kind of turn to a few sort of use cases that we're seeing in the IRS. So right now, the IRS already has over 60 active AI projects across the agency, 12 different projects kind of focused on customer service, 27 different pilots focused on tax compliance, and 29 different programs kind of focused on internal process efficiency. So it's being used in pretty much all facets of the Internal Revenue Service. And I think this is very underestimated to the public in terms of how much AI is being deployed and used in their tax services. And it's also overwhelmingly underestimated in Congress how much it's being used. And I think there's a sense that it's not being used at all. So that's, I think, sort of just a knowledge barrier that we're working to help members and their staff primarily understand as they're thinking about additional ways to improve the process. And so one of the main ways that AI is currently being used in other kind of like automated language learning models is primarily for, preliminary taxpayer assistance. So AI-powered chatbots that are able to answer questions, reduce wait times, and help, with the simple repetitive questions that taxpayers might have as they're filing their returns, leaving time for the workers who are still left in the agency to be able to answer some of the more complex return questions. They also use it to validate returns and facilitate error correction. So they're able to use it to read the returns, understand where there might be an error, and flag it in the system for a worker to review. It's being used in data collection and matching. So there you have the capability to web scrape and use database matching across different online platforms to better and more quickly verify taxpayer information when returns are processed and help, again, flagging those potential concerns and errors that otherwise humans might have to do on their own. And I think one of the more promising uses for just automation and expediency within the agency is it's able to translate handwritten forms into digital data, which reduces the need for sort of the manual entry, the rote tasks that a lot of workers are doing, which leaves more time for them to really do the assessment of those returns and kind of understand the complexities without having to spend most of their time inputting the data. So there are a lot of really potential and current, tremendous opportunities for this to expedite the tax return process and experience for taxpayers in a way that they are maybe feeling underwhelmed by the way our tax system currently works. I think the real challenges and concerns lie in the compliance process. So when AI or these language models are being used to flag returns for audit and potentially implementing different types of bias into the system that skews the way these returns are flagged and flagged and assessed within the agency. And so a lot of this kind of falls under risk detection and scoring. So AI can flag anomalies in tax returns and predict the level of fraud risk based on patterns across the board. And I think that's one helpful way that, having humans there to assess those patterns and try to identify whether or not they are clear patterns of, filing errors, incorrect income, other kind of incorrect indicators that are directly related to the tax policy and not other kind of concerns around the taxpayer themselves using demographic data, et cetera, can be a really helpful way as long as there is a human worker kind of there assessing that these patterns and trends are actually correct and accurate and not based on biased algorithms going into the system. It can also predict and target kind of high-risk returns for audits and help improve audit efficiency when they're selecting which ones to go after and sort of which groups of taxpayers might have the greatest return on investment. However, that also kind of comes back to this bias risk of right now we know even taking AI out of the process, the compliance process disproportionately affects and targets low-income taxpayers. And I think that's one of the concerns with continuing to expedite and automate these processes is that AI will kind of build off of those efforts and continue to integrate those biased interpretations into the way the algorithms are producing and reading these returns and flagging returns for audits. And we don't want to allow the system to kind of disproportionately continue to assess those returns in that way. And I think that is one of the areas we're spending the most time kind of trying to understand and assess how to protect and preserve the taxpayers who kind of don't necessarily have the tools at their disposal to respond to those audits, and who maybe don't have the same level of rights and protections currently under the law to be able to ensure that they're not disproportionately flagged in the audit process, and who really rely on those returns to just survive. And we don't want them to be held up because of computer processing systems that aren't necessarily built on the correct algorithms and accurate understanding of the tax law. And I think one example that we've spent a little bit of time trying to understand as a caution case and helping policymakers look at is the child care benefit scandal in the Netherlands that happened a few years back, where AI was used to assess eligibility for the child care tax subsidy. And it was used to determine potential instances of fraud. So individuals who were claiming the subsidy incorrectly were flagged through the system. However, the system was sort of built on a false notion that immigrants and certain ethnicities were at a higher risk of fraud than other taxpayers applying for the subsidy. And so it was disproportionately flagging returns based on ethnicity status, not other indicators that were particularly relevant for receipt of the subsidy, such as income income and sort of location of where you live. And so the system was flagging all of those returns as potential instances of fraud and kind of applied an all or nothing approach to this, where anyone who was flagged for fraud at any given childcare center, the entire center was flagged for fraud. And so all of the taxpayers, all of the parents in that center were no longer eligible for their subsidy while the system kind of understood whether or not fraud was actually happening. And so it led to really high recapture rates, even for really small errors within the system. And it treated non-compliance or potentially unintentional errors as intentional tax fraud. And so I think this just really highlights the potential design flaws that could amplify human bias in the algorithms that might deny taxpayers due process when errors are found through the AI systems and caused undue hardship for many taxpayers. And we don't want to reproduce those systems and biases in our own systems. And then really sort of this last area to highlight in the potential opportunities, but also risks of AI and tax administration is sort of wanting to understand areas for good governance, the fact that there are gaps in good governance right now and a lack of public guardrails due to a lot of these shifting priorities and executive orders from different administrations. And I think that the use of technology inherently presents risks to privacy, fairness, and transparency, but that doesn't mean they're risks that can't be overcome and intentionally assessed constantly through the consistent monitoring and development of these AI systems. As I mentioned earlier, the IRS and most other agencies in the federal government already have chief data and analytics officers, responsible AI officials who are supposed to be documenting and identifying these procedures. But the constant changing policy landscape has made it much harder for them to do this swiftly and accurately, leaving a lot of gray area for the agencies as they're trying to deploy these different policies and technologies throughout the year without that guidance. And policymakers, agency officials, members of Congress really need to understand what's going on to be able to write clear guidance and have clear guidance to go back to ensure that those necessary guardrails are in place. And right now there's several interim policies that exist, but again, durable, predictable governance policies will ensure that AI and technology is responsibly deployed into the future and not just shifting at the political whims of whoever's in office. And kind of all of that to say, there's a lot going on right now. There's a lot of uncertainty, a lot of lack of transparency in what is happening. And it is more critical than ever to ensure that there are humans as part of the process at every step of the way to really not only preserve trust, but ensure that there is someone who is understanding what is happening and able to act swiftly to responsibly correct or change course as different things are happening. And I think part of that is ensuring that accurate information is going out to the taxpayer, right? We don't want AI systems to be trained on incorrect information that's continuously being sent out to taxpayers. And we want to ensure that the data that they're using and collecting from taxpayers in return is secure and processed in a fair way. And we want to ensure that humans are there to correct any unintended consequences or unintentional errors on the taxpayer's end as it's moving through the process. Second, and I think we kind of heard a little bit of this through Sarah's presentation, is that humans are able to kind of provide the nuance that AI lacks, right? They're able to kind of ask these questions. They're able to really dive into some of the details that AI might miss, especially for some of these really complex cases that aren't just a simple inputting information into the system that requires more nuance across different areas of the code and different parts of the process. And so chatbots and the use of that at sort of the front end for some of those simple questions can free up staff to answer some of the more complicated issues, but we don't want chatbots and computer systems to completely replace the staff and disrupt the jobs within the IRS agency. And part of that is not only ensuring that there's staff there to answer questions, but that the staff are trained and capable of answering those questions. So part of the transition to a more modern IRS and more modern technology is that the workers who are already there need to be upskilled and reskilled to understand the technologies that they're deploying and ensure that they can actively support taxpayers with those changes. And really kind of just with all of that, understanding that this is a human-centered approach and humans are integral to the process is something we're trying to continue to push to shape kind of tax administration into the future and ensure responsible deployment of AI in the tax policy world, and really want policymakers to understand and be able to establish durable government frameworks that are not subject to volatile political landscapes, set clear technical standards and benchmarks to measure and evaluate success of the AI deployment, support worker training to responsibly oversee and assess AI outputs for accuracy and fairness to reduce potential biases, and build public trust through transparency, including detailed reports on how the AI models are tested, updated, and assessed for risks, sort of similar to how we saw with the release of the code for the direct file programs, ensuring that's really available for all the different ways AI is deployed throughout the agency so people can be critical consumers of tax policy and critical consumers of AI use through the agencies, as sort of another checkpoint for the responsible deployment of AI in these systems. Yeah, and so I think a lot of these are really important insights, and I've learned so much today just listening from everyone else that I think are really important and insights to turn into sort of actionable policy recommendations for Congress. And that I think that intersection between sort of a lot of the academic research and what the members of Congress are looking at on their day-to-day basis is going to be really important to ensuring the responsible deployment in the future.
So thank you, Emily. I warned that I was going to be an active moderator, so I do have some thoughts I want to add here that kind of lead to Caroline's and Colin's presentation about trust. But you know that I spent from 2022 until just March this year, 2025, meeting and working with the Dutch Finance Ministry and the Dutch Inspector General and the quartermaster looking into the Toeslagen affair that happened in the Netherlands, and worked on some recommendations with them, including the creation of a taxpayer advocate for the child tax credit, the child tax benefit, and other social benefits in the Netherlands. So that was an outcome of that scandal. I want to note a few things about that, what really happened there. And this goes to the concept of whether you really need a human in the loop or it's something beyond a human in the loop. Some of the folks, one of the three key things that came out of that scandal was that every part of the Dutch system broke down. People raised cases and objections about what was happening. Okay, we now have a cat cameo appearance. You missed it, real cameo. But they raised it in the courts. It was raised by the parliamentary ombuds. There were internal memos saying things were going on that were inaccurate. And at all points, until it reached critical mass, did the entire Dutch state ignore that and say, no, no, we're right. We trust our algorithm. We also trust the assumptions, that the human assumptions that underlaid that algorithm. The second piece, I think, which is really important, what they said was that the transparency, or the lack of transparency, that opacity allowed hunches and increased the magnitude of the error. That there wasn't any transparency, so you couldn't see what was going on. The third piece was that there were no current norms that mandated that tax administration carry out a disparity and fairness assessment. And this goes to, the EOs revoking, the Biden administration's executive order on, responsible and fair use of AI, and then replacing it with an EO that says no woke AI, that you would basically say, if you did a disparity and fairness assessment or looking at the impact on vulnerable populations, that would be woke, and we're not going to do those assessments. The third piece, and I think this goes to the the human, and a different form of the human in the loop, is that there were no intermediary rights, that algorithmic governance expedites decision making. So there's no intermediate state between this declarative stage that the model says, aha, this is fraud right here, and then the algorithmic output that someone is looking at it and saying, well, now wait a minute, we've got some outlying use cases here. So what that really came down to were a series of things that I've been thinking about bringing into the Taxpayer Bill of Rights that are actually missing, which is, placing a duty of care on tax officials or any government official to do these kinds of analyses, and that there has to also be a right to make mistakes so that you're not saying everything is fraud. And then the third piece is that there's got to be a right to an explanation, which goes beyond transparency, which is why what Sarah was talking about the direct file code, is so excellent. You're seeing how they arrived at the result of the output, really. And then finally, the right to object, which is in our code, but I think it has to be built into AI governance and AI design. What if you disagree? Where's that built in to the model, recognizing that the model itself may be wrong? So I just throw that out there as some thoughts. We can talk about this later, or I don't know, Emily, if you want to add anything right now.
No, I think those are really helpful additions, and I agree with everything that you said. I think it helped just really summarize a lot of the points that I was trying to make.
Yeah, I think these were the things that basically the Dutch government and the Dutch people were really wrestling with. And to lead into, Caroline and Colin, I was in the Dutch airport earlier this spring, and I was pulled over by security for a really long time. But in talking with the security person there, who's a lovely human being, she's saying, well, why are you here? And I was like, I was at this event about establishing the taxpayer advocate, et cetera. And she said, oh, that was awful. What happened was just awful. We were just all so shocked, and we couldn't believe that we had allowed that to happen. And I thought that, that here was just this random human being I was talking to, and her, reaction, it had gone through the entire society that they had done this as a society, and it eroded trust. So I think that's a really good lead into, Caroline and Colin.
You know what? I think it's a great lead into it, and I'm super regretting going last at this point. But really quickly, can you clarify for all the folks in the room that might not be readily familiar with the Dutch scandal, exactly what happened?
Okay. So they had a child tax care benefit, which was paid out monthly to eligible families. But in order to get it, and it was subsidizing your childcare expenses, but in order to get it, you had to estimate your income in advance and also estimate your childcare expenses in advance. So it was money going out. And they had, I mean, it was based in real concerns about fraud. They had very explicit issues, examples of people gaming the system. But there were also, because these are low-income families, many of them were in fact immigrant families that were receiving the benefit, and they were having to estimate things, and they had a duty to come in and change, report any change in circumstances. This is very similar to the premium tax credit, right, where you're estimating in advance, and then you've got an obligation to change, to tell the system during the year that something's changed. And of course, people didn't do that. So they developed this algorithm in response to some of these fraud, these scandals, that these fraud instances that they legitimately identified. But before they developed this algorithm, the tax agency adopted, with the blessing of the courts and the blessing of the legislation, and what Emily referred to as the all or nothing approach. If you made a mistake, all of the payments would be clawed back, including going back years. So for example, there was an actual case where someone made a 27 euro mistake and they clawed back 27,000 euros from a low income person. And then what was built based on some instances, what they programmed into this algorithm was ethnicity, non-Dutch, basically, as a risk factor. And so that just flagged any illegitimate, any non-Dutch return, and it froze things. And they instructed their staff to not answer calls or questions regarding this program. So there was no dispute resolution other than going to the courts. And for several years, the courts just upheld the all or nothing approach until ultimately there was a major class action that led to the resignation of the entire Dutch government and the establishment of a coalition government that was supposed to address this huge scandal. The third piece, and Emily, referenced this, and this goes back to the playing of hunches. In all of the investigation, one of the senior leaders of the Dutch finance agency admitted that because they had seen some things where there might have been one childcare agency that really perpetrated, fraudulent statements of amounts of expenses and everything, that they programmed in that anybody, if they identified an agency that they thought was problematic, then every single person that was getting childcare from that agency was flagged as a fraud risk. And what happened there was that the finance minister said, we thought it would be an 80-20 rule, that 80% of the people would be fraud risks and 20% would be legitimate, and they would find their way through the system somehow that was non-existent to raise the disputes. What actually happened at the end was that 96% of those individuals were compliant, and only 94% were compliant, and only 6 were basically, non-compliant. So it was just the opposite, but the whole system was designed around this bias that there was risk in the system. And then it was compounded by a failure to have dispute resolution, or humans there listening to the stories of the people who are saying, but. And that information never got back into the system, so that you basically had model collapse, that it was just learning from itself, and there was no other information coming in. Which, if I can just stop my ranting about this, one of the things that I've ranted about with the IRS, as taxpayer advocate, and today with their fraud detection systems, is that they're not building in the data from the dispute resolution mechanisms that already exist, like the Taxpayer Advocate Service or the tax court. So for example, with earned income credit cases, Taxpayer Advocate has a 65% relief rate. in earned income credit cases. These are taxpayers who have come to us. The IRS has said you owe, and the Taxpayer Advocate Service in 65% of the cases got a different, convinced the IRS it was a different result. Why are those cases not fed into the system so that it can learn from those? And the same thing with the settled cases in the tax court, where the government has agreed that the taxpayer doesn't owe this despite what the audit results had. Those cases can be, factored in to see, so the machine can learn what did they get wrong, what were the characteristics in that case. But that's not fed in, so you have a model that's just learning from bad data, and incomplete data.
Wow. Okay.
Caroline, go for it. Trust.
Follow that. Hi, everyone. I'm so delighted to be here. I am really excited to present some of the latest research I've been working on with my colleague, Colin Coyle, who I can't believe we've been working together for 6 years. It's a long time. And I always like to start off our conversations with our origin story. I do AI research as a result of Colin pushing me to do so. It was not something that was on my radar or that I was interested in whatsoever. Instead, my true passion is looking at the impact of congressional witness testimony and its impact on legislative and judicial outcomes. I have created this amazing data set that tracks the underrepresentation of women as congressional witnesses. And 6 years ago, I was looking to hire a PhD student to help me organize this data and really propel it forward in the public policy space. I'm lucky enough to work with some of Emily's colleagues on this research. And I was doing interviews, and Colin came in for an interview. He had a great interview, and he really had brilliant ideas about how we could take this research and really take it to the whole next level. And I asked him, I was like, Colin, this is so brilliant. I'm very confused as to why you'd want to work on this. You're a computer science PhD candidate. Why would you want to do this? And he goes, oh, no, I'm a freshman. And I have been working with Colin since he was a freshman and into his current PhD program. And as part of that relationship, we have done, a dozen or so works together, mostly in the congressional witness space, but also increasingly using AI in our research. And I was approached in 2023 by IBM Center of Business of Government, which is the think tank that's housed within IBM, to do research on using and considering how tax administrators around the world, and particularly in IRS, could better leverage AI. And I went to Colin and I said, I don't know what they're talking about. And he was thrilled at the opportunity to do this kind of work. And he convinced me that it was something that was worthy of academic pursuit and that it was something that we should be really prioritizing in our research, both from incorporating AI techniques into our research, but also considering more relevantly for me, less for him, on how AI is currently being deployed in tax administration. Is that a fair assessment, Colin? What do you think?
Very much so, Caroline.
Okay. So here's what we're going to talk about today. We are going to talk about a quick history of AI, how its effective deployment requires certain guidelines and trust. These are themes that we've heard through all of the conversations that we've had to date. But what we'd like to do is ground it a little bit more in present day examples to kind of acknowledge the ubiquity of AI and how we're all using it all day, all the time. We're then going to talk a little bit more about AI and tax administration specifically and the current state of play. Then we're going to get to trust issues. We're going to talk about how there's a trust deficit with AI and IRS and how that effectively compounds effective deployment. And then we're going to talk about potential solutions. Before we get started, I do need to acknowledge that I am a member of the IRS Advisory Council. None of the comments or materials that are being discussed today are in connection with any of that work. And so this is all publicly available in the slides, which I'm happy to share, are the citations for the materials that we use. So to get us started, I think we should turn it over to the AI expert, which is Colin, who is now actually in his PhD program at the University of Vermont doing a PhD in AI. So have at it.
Thanks, Caroline, for teeing me up. So if you'll go to the next slide, Caroline, we have been using AI for 50 years at least. So, I mean, we've been using AI, and I would like to describe it as invisible intelligence. It's always been behind the scenes, and we haven't been thinking about it. And that was kind of the intention. AI algorithms in history have not been consumer focused, but we've been using them for ages. So I don't know if we have the bullet points that can show up, Caroline, or if you had a technical difficulty there. But ever since the 1990s, for example, we've been using AI systems to read our checks in the banking systems. Um, we have been In 2006, Netflix had a competition on how to use AI to better optimize its recommendations. And I see we're shuffling our slide deck, it looks like a little bit.
No, we're not, Colin. We're talking about the deck that's here. If you were here in person, this would not happen. Not only is Colin my research colleague, he's also tech support. Nice.
Maybe,
God, if you were
maybe Colin, maybe you could make Colin a co-host so he could share his screen and move the slides. Could that happen?
I would love to do that, Colin. But some of the more common examples, and one of the things that we wanted to emphasize on this slide is how AI has already been used in financial transactions in ways that we don't even anticipate or recognize. For example, with check reading and in banks, right? Since the 1990s, AI systems have been deployed to reading millions of checks per day, and we're all readily comfortable with the credibility and process from which that's gone on. And
Yes. And even things like your vacuum robot are AI systems. And so we've been using them behind the scenes and we haven't been thinking about it. And even the IRS has been using these behind the scenes. Caroline?
Yeah, so IRS has deployed AI as far back as 1986, right? It was established the first AI laboratory as part of an initiative to explore potential applications of new technologies to tax processing. Emily did a great job in her conversation talking about how more AI has become more commonplace in the user interface with irs.gov and in the tax preparation and research process that we see on irs.gov, but it's always been there. And this is something that taxpayers, whether or not they recognize it, have been readily relying on throughout the tax preparation process, at least since 1986.
But everything changed in late 2022, early 2023, when we saw a shift from this invisible intelligence behind the scenes to really consumer-facing AI. So in November 2022, ChatGPT came out. Since then, about 10% of the world's adult population regularly uses that chatbot. Another tool that came out super recently is Sora 2 from OpenAI. That hit 1 million app downloads in 5 days. And if you're on any social media, I guarantee you've seen a lot of Sora generated videos. I mean, these are popping up everywhere. People are using this. Google has their AI overviews, and approximately 20% of Google searches, which there's over 1 trillion Google searches a year, include some kind of AI generated summary at the top of the page. So that means hundreds of billions of these Google searches include AI content right at the very top. So we've shifted from behind the scenes AI implementation to really consumer focused AI implementation. And that has some potentially damaging consequences. So in 2023, Google demonstrated its chatbot, which was at the time named Bard, and the model made up facts in response to a question, and it made a mistake. And following that, Alphabet, Google's parent company, lost almost 10% of its market cap, which comes out to over $100 billion. This is one of the largest declines of a company's market cap in history. So, I mean, there are huge consequences. Now, we had originally planned to talk about the Dutch benefit scandal, but since Emily and Nina had already mentioned that, I'm going to briefly say that in 2023, some researchers out of Stanford University's law school found that the IRS had racial bias in their audit rates that was caused likely by algorithms determining who was likely to have committed fraud or made a mistake in their tax returns. That was confirmed by the IRS in 2023. And at the time, Danny Werfel, the IRS commissioner, said that they were planning on addressing those racial bias issues coming from the AI algorithms that were identifying people for audits. So there are huge consequences, both in terms of like magnitude of impact, but also like right here at home in our own tax administration when AI goes wrong. And so one of the core things that we're arguing is that trust in AI depends on strong governance that ensures accountability. We need things like human oversight. We need humans to be able to be in the loop. You know, they have to, we can't replace human decision making with algorithmic decision making because that's what causes major issues. We also need bias and privacy safeguards. Like in 2023, we need to increase our protections against racial bias. All of our IRS data is also private. It should be kept private. I don't really want my tax return going out to everyone. So we need privacy safeguards. And additionally, we need a strong governance and oversight body in case anything goes wrong. Like Nina was saying, in the Dutch case, everyone just kept saying, well, we trust the algorithm, it works. We're going to just keep trusting it and we're not going to take any action. I think we need the opposite. We need humans in the loop who are able to respond to crises as they're emerging and prevent them from blowing up. And that's what really makes AI turn from this tool that we don't really know all that much about or can't really understand how it's working into something that we can trust for AI applications or for tax administration applications.
So it's not just us saying this. I mean, you could take our word for it, but when we partnered with IBM, one of the amazing things that we were able to do was to gather stakeholders from tax administration services from around the world, as well as industry stakeholders, academics, and others. Nina was there in October of 2023 at a roundtable to discuss specifically government deployment in tax administration functions of AI. What was necessary? What did this, group of people think was absolutely bare bones minimum that governments needed to hone in on in order to determine the effective deployment of AI? And the key findings, some key themes came out of this conversation. First of all, AI can be an incredible multiplier for government, enabling faster and more accurate benefits delivery. Government can thoughtfully and decisively address questions of fairness, explainability, security, transparency, and privacy. However, a well-trained and empowered government workforce is critical for ethical AI implementation, and that you have to have funding and clear frameworks to support AI implementation. Building on the comments and conversation, as well as additional research that we did following the October 2023 roundtable, we went ahead and released a report together with the IBM Center for Business of Government, next slide, that is AI and the Modern Tax Agency, adopting and deploying AI to improve tax administration. At this point, it was released in January of 2024 as the presidential election was well underway, but it really focused on steps that the then Biden administration had done in a follow-up to the prior Trump administration's initial works on AI to discuss governance and requirements for deployment across the federal government. Now, more specifically to tax administration functions of AI, as Emily did such a great job talking about, we included case use examples and summaries of how AI was being deployed
by tax administrators around the world. We had over a dozen countries represented in both the October roundtable and in a subsequent roundtable, ranging from Singapore, Canada, Brazil, Mexico, talking about how AI was currently being used. And some of the main functions are going to seem readily familiar to you because we've already become so accustomed to using chatbots and virtual assistants. But some tax agencies have really been aggressive in deploying these more effectively than IRS. And we saw that with specific examples in Canada and in Singapore. But we can see that there are opportunities for deploying AI with taxpayer services, with explaining taxpayer benefits, with call center optimization and faster processing. On the operations side, you can use AI for document summarization, document translation, for policy traceability research, forecasting, and audit compliance. And then even more internally focused, you can use AI for IT optimization, code creation, test data creation, security operations, as well as HR productivity. More recently, the OECD last month produced its latest report on how governments from around the world, and particularly its member countries, are using AI. And lucky for us, they included tax administration as one of the 11 functions that they studied in their over 200 use cases that they analyzed for how governments across the world are leveraging AI. Now, 29 of the 38 OECD members that reported using AI in their operations in 2024 reported using AI deployment in their tax function. And you'll see from this slide that the most obvious use case is with detection of tax evasion and fraud. We also see it with virtual assistants. So not unlike your online shopping experience, you're going to get an access to a chatbot when you are having questions or interfacing with irs.gov, otherwise as part of the tax filing process. In addition, there are countries that are using it, AI, in making official administrative decisions, making recommendations for actions, as well as less popularly to ensure the integrity of tax administration systems and automated provision of personalized information to stakeholders. More specifically with the IRS, next slide, we've had challenges that have resulted from a series of changes in administration and priorities of how the IRS is responding to the deployment of AI in its specific operations. And this is an incredibly helpful timeline that illustrates the challenges of the EOs that Emily introduced in her talk that were first issued during the first Trump administration, which went all in on AI deployment, and then that that initiative was picked up and refined further by the Biden administration. That notably in the executive orders that they passed had a more focused approach on considering AI and the role of bias in AI, as well as a more expansive list of the types of AI deployments that would warrant more aggressive governance standards for AI deployment, which we'll talk more about in a moment. Now, wait, go back. There's one thing I wanted to talk about here, Colin, and that is what you can see, what has been circled in pink is the range of the EO orders that have been rescinded since the Trump administration came back into power. What's interesting about that is that if you do a comparison of the functions of AI that are warranting a higher standard of AI governance under the Biden administration versus the Trump administration, they are not identical. They are substantially similar, but yet they are not identical. Now, taking an even further step back, it's not just executive orders, next slide, that controls the governance and deployment of agency AI use. There are there are multiple federal laws Congress has already acted on AI governance and deployment and by federal agencies dating as far back as 2019. But in addition to OMB guidance and executive orders, you have the Office of Science and Technology Policy, the Department of Commerce, GSA, the National Science Foundation, all have a role in directing federal agencies in how they are doing effective AI deployment. But on top of that, there are at least 10 executive branch oversight and advisory groups that have a role in AI implementation. So it is evident, even in the current administration, as a continuation from their initial foray into this space, that everyone agrees that governance is paramount. Everyone also agrees that trust is paramount. It's right there in the title of the executive orders that have been issued, as well as the follow-up guidance that has been issued by OMB, how to prioritize trust in AI deployment. Next slide. So in April of 2025, the OMB director issued its latest guidance for federal agency deployment of AI and noted specifically that every day the federal government takes action and makes decisions that have consequential impacts on the public. If AI is used to perform such actions, agencies must deploy trustworthy AI, ensuring that rapid AI innovation is not achieved at the expense of the American people or any violation of their trust. But this begs the question for those of us that are not experts on AI deployment, why is trust so necessary? And the answer to that is that in order to have effective deployment, diffusion, and adoption, you have to trust that the software that you're using is going to generate a credible and truthful response. Would you let TurboTax help you do your tax returns if you didn't think the software was effective and or trustworthy? Obviously not, right? Like there is an element of trust that's been studied by social scientists, academics, and others for decades on the relationship between technology and trust and how trust underpins the effective deployment and adoption and diffusion of technology and why it's so critical. However, in the current environment, it is not unreasonable to consider the ongoing trust issues that we see with AI deployment. Next slide. Now, one thing I would like to point out really quickly, which is not, we haven't written this paper yet, but will. But one thing that I think is really important in considering the various approaches that we see from the Biden and Trump administrations as to is what categories of actions by agency deployment of AI are considered to be high impact AI use cases. And this is the current list that's in the 2025 OMB guidance. And it is a similar but not identical list to that which was issued by the Biden administration. But you'll note that there are 5 or 6 specific use cases that are considered high impact AI use cases that if agencies are deploying AI that impact any of these functions, which include having a significant effect on civil rights, civil liberties, or privacy, or an individual or entity's access to education, housing, insurance credit, employment, or other programs, or access to critical government resources, or human health and safety, critical infrastructure, or strategic assets or resources, then there are different AI governance and transparency and risk mitigation requirements that an agency must adopt with respect to these kinds of functions. And what you will note that is not on this list is tax, right? Next slide. And the reason for that, I believe, is because when we think about tax and when we think about tax benefits, credits, deductions, no matter how much of the social programming we run through the tax administration system, the courts and Congress have not recognized tax expenditures as actual benefits. They are not technically benefits. They're tax expenditures. And as such, they are not subject to civil rights laws. They are not subject to benefits, traditional benefits, considerations and protections that we would otherwise consider. There's been a lot of research done on this in this space when it comes to civil rights and tax expenditures, but you can just look to any publication published by the Joint Committee on Tax that reiterates over and over again that tax expenditures are like direct spending programs that function as government entitlements who meet the established statutory criteria, but they are not in fact considered to be tax benefit, or they're not considered to be government benefits per se, and they have not been recognized by the Supreme Court as tax benefits. Hence, when we think about what is high-risk AI, and when we think about the governance considerations that we want for our high-risk or high-impact AI case uses, in my mind, I would immediately think of tax because that's one of the most obvious and common ways that people are interacting with federal government services. But technically, these are not benefits that are subject to those higher risk mitigation and higher standards of AI governance that are required either under current law or current OMB guidance. Next slide. So then this raises the issue of trust, right? We wanted to talk and think more about AI deployment and an ongoing trust deficit and approach it from two different perspectives. Number one, how individuals and how US taxpayers feel about trust in government, but also from the perspective of trust in the IRS more specifically, and then also from the perspective of trust in AI.
Yeah, so when we started this work, I assumed that everyone trusted AI, everyone was super enthusiastic about AI.
That's how Colin is.
Well, I mean, that's how I am, and that's what I thought based off of the massive and rapid adoption of AI. But we're seeing is like the trust deficit in AI and diverging perspectives. So researchers like us and executives really love AI. I mean, a massive number of S&P 500 companies cite AI specifically in their earnings calls. 80% of business organizations use AI, and then another statistic from a different survey, 60% of companies with more than 10,000 employees use AI to produce goods and services that actually get sent to consumers. So there's this massive adoption of AI, but on the other side, people hate AI. They really don't trust it. If you say that AI was used in a product, people are less likely to buy it. If an AI model makes a mistake and a human makes a similar mistake, people evaluating both are going to distrust the AI more and assume that the AI system is worse than the human who made the same mistake. And so people lose trust in AI faster, and they also don't trust AI as much as they like people. And that we think is compounding with the people's distrust of the IRS.
So there has not been recent research that we have found since January of 2025 with the ongoing state of play with how government perception, and we haven't looked at partisan research prior to or more recently, but the most recent research we could find was from 2024. Pew Research Center did a survey of, on balance, Americans' views of 13 of 16 different federal agencies and people's perception of them. And what you will note, of course, is that IRS is at the very bottom, right? And this is, probably related to, and I can't say this specifically, but I've done a lot of research on small business tax literacy. And I worked with a tax economist, Barbara Robles, in doing a survey in 2023 of small businesses, asking them about their understanding of taxes. And at the very end, Barbara pushed me to include a question about how people feel about filing their taxes. And I said, I don't care about that question. That doesn't give us any hard data. Why do I care about that? And she reiterated, no, trust me, we really need to ask this question. And we did. And it was the one question that has become so integral to my research and was picked up by, not only members of Congress that we briefed on this research, but also the media when we presented this research. 37% of our respondents had anxiety or bad feelings when it came to tax time. Right. And it's easy to understand why, because of perceptions of penalties, perceptions that you're going to go to jail if you do it wrong, how you feel about filing your taxes. So it's no surprise that when you have more than 1/3, and obviously you can't replicate those results nationwide, but even just talking to everyday people, how do you feel about filing your taxes? You will find the exceptional nerd like myself that's like, I feel really good. I'm doing my government service. But more often than not, you're going to find people that have anxiety, fear, or actual, feelings of insecurity and fear around filing their taxes, which leads to overall distrust in the IRS. And when we dug around a little deeper on this, next slide, we looked at ongoing IRS survey data about how people feel about the IRS in general. And
differentiate, because we have similar feelings, I don't know about people in this crowd, about the division of motor vehicles. Distrust of the motor division, but at least in New Jersey, the frustration, the anguish, do we have enough points to get our license renewed? I just wonder with the IRS, it's that same sense of not distrust per se. There's some of that for sure, but they're not going to answer my call. I'm going to be bad around 10 different people. So I mean, I know people don't love the IRS, but I think there's a lot of different reasons, and I'm not just sure if it's trust per se.
So I think you're right, which is why the title of the presentation is Algorithms of Anxiety, because the question that we asked specifically is, how does it make you feel? And one of the answers that we specifically included that was the most popular answer for 37% of respondents was anxious or anxiety or feel bad, which is not the same thing as being irritated, frustrated at the process, right? And the difference between being subject to a potential penalty of paying a ticket for not properly having your car registered versus your fear that you're going to go to jail over failure to pay your taxes properly. I think that and it's certainly worth investigating further and doing more research, but I think the general perception of the penalty scheme behind IRS or behind paying your taxes gives much higher rates of anxiety, fear, distrust than your everyday annoyance of dealing with the government or dealing with, those everyday bureaucratic headaches that we all go through to register our cars or get our driver's license. But even if you don't believe me, you should consider the IRS data that shows that there is declining trust in the IRS. And they have done this survey every year since 2017. And what it's shown is that the majority of taxpayers do, in fact, trust the IRS to help them understand their tax obligations, but that the trust in the IRS to help them do so has been declining every year since. And that we know that this is particularly important. And the reason why the IRS does this trust assessment survey is because trust is inherently connected to compliance in a voluntary tax system. If people don't trust that they're going to be able to get the correct tax information and be able to file their taxes correctly, they're going to be less inclined to be compliant. Next slide. So this is one of the, and this is the a slide direct. I would love to take credit for this, but I did not do this. This was the IRS's own. The next few slides are from the IRS's own deck when they published this publication, which is cited to in the December 2024 executive report on the Comprehensive Taxpayer Attitude Survey that shows that you can see that there's an ongoing declining sense of trust in the IRS to help you understand your own tax obligations. Next slide. And that there's overall, the majority of people do trust the IRS, but that it's on the decline, and that the relationship between trusting in the IRS and your willingness to comply is inherent for compliance. Next slide. And so then the question becomes, what do you do if you have mistrust both from using AI and it's no longer invisible? It's now something that's visible that people are going to become wildly aware of. This is something that's been announced a priority by Treasury Secretary Bessent, as well as other senior IRS administrators, that we are going to be increasingly relying on AI to deploy important IRS services. When you have a growing distrust of AI, as well as a declining sense of trust in the IRS to help you navigate your tax filing obligations. So what's an agency to do? Next slide. Interestingly, the most important recommendation that I think that could contribute to helping people regain their trust in the IRS is, of course, transparency. And how do we do that? We do that, as Kathleen already noted, by increasing tax literacy. And I think one thing that the IRS has already recommended to itself, and that's in this deck that Sarah alluded to, is publishing the tax formula of how, and a calculator on the IRS itself, so you can see how your taxable income is calculated to your actual taxes owed. If you could see the progressive marginal rates and how your income is taxed at each of those rates, as opposed to just getting a final computated number, that may go a long way towards both tax literacy and also transparency that would help reiterate the trust. Now, of course, the larger question there is, well, how do you get to taxable income? It's the thing I always tell my students. What are the two things you need to know to file your taxes? You need your filing status and taxable income, right? And by focusing education efforts on overall tax literacy, that is absolutely critical, but also focusing efforts on transparency around computation, that might go a long way towards reiterating trust. And then there are other recommendations that are ended here, but I will stop because I think I've gone too long. Colin, do you have anything else?
No, I just wanted to reiterate is that, you know, we've got this compounding issue of trust in AI and trust in the IRS, and anything that the IRS can do to address both while they work on deployment is going to be critical for compliance. Thank you for having us this morning. Look forward to the conversation.
Thank you all. Caroline and Colin, I want to share with you some data from a national survey that the Center for Taxpayer Rights did, which was funded by Robert Wood Johnson back in February and March of 2024, during the filing season of 2024. And our focus there was low-income taxpayers with families, and that we actually identified a population that were at poverty level, basically, with children, because we were really trying to go at what were the barriers of people claiming benefits and interacting with the IRS. And one of the questions that we asked, which was a question that we had asked in other taxpayer advocate surveys, although this one was not done with the federal government, they refused to do this because we were also identifying we asked taxpayers families, respondents to identify by race and ethnicity, and the IRS wouldn't do that. But anyway, 47% said that they felt cautious about the IRS. 36% said they felt frustrated. 36% said they felt anxious. And 34% said they felt nervous. And then we asked them, to agree with some statements that we had tested with other populations like self-employed in taxpayer advocate service surveys, and that were also tested by some psychologists that are working in tax around the world. And so we asked, do you feel that the IRS goes after taxpayers? And 42% of the respondents said either they agreed or they agreed strongly that the IRS went after taxpayers. 39% said the IRS had no sympathy with taxpayers. Only 30% said the IRS acts on behalf of American taxpayers. And then we said, is the IRS trustworthy? And only 28% agreed with that. The IRS is more concerned with collecting as much as it can than with collecting the correct amount. 27%, a quarter of the people, said that they agreed with that. And then only 18% said agreed with IRS employees act in my best interest. And only 14%, which is a small amount, which I thought was very interesting, agreed that the IRS is less trustworthy than other federal or state agencies. But 26%, 14% agreed with that statement, 26% disagreed with that statement, and 39% were neutral, which I view as a terrible result, that you don't have an opinion about that statement. So your data is really, with the most vulnerable population that you can think of, and this was statistically valid nationwide, you can really see this trust deficit showing up.
But so Nina, that's a really important point, because if you think about it, I think that if you were to do a similar survey today, and not just limit it to low-income taxpayers, but if you were to do it on a partisan basis, you would have a wildly different outcome of trust in government and trust in the IRS. In view of recent events that have happened with data sharing with DHS and otherwise, I think that you're going to have even decreasing levels of trust, even beyond just the low-income taxpayer population that you surveyed. But also, I wanted to raise one other point that I think Emily touched on that I hadn't realized until I was using AI to Google this while she was talking. But there were, and Nina, you would know better than me, but there were, as of January of 2025, over 109,000 employees at IRS, with the separation of service, both from the RIFs and the voluntary separation of service. That's around 27,000 IRS employees, plus Emily's 35,000 that are currently subject to the government shutdown. You have more than 50% of the entirety of the IRS workforce that is not there, right? Like that kind of decimation of that workforce. And the reason that I raised that is because Emily's point about human in the loop, I suspect that if you did a survey and you had people talking to human beings at the IRS, the survey results would be different. Yes, sorry.
About bringing this into, can y'all hear me on there? Just a question that leads into Kathleen's work. A question relating into Kathleen's work. It's really scary, right? You have this broad diet of people having this echo chamber and very, very bad information about what the IRS does. I worked there. I loved the people there. It's extraordinary people that I find highly trustworthy, on the most part. But overall, it's a really great agency. But if we're getting bad information like this on a regular basis, is there any hope? I'm terrified. I mean, like, if there is hope, I heard your suggestion on literacy. I mean, I think that is important, but I don't know that fixes the echo chamber problem. Is there anybody who has thoughts on how you fix that echo chamber problem? Because until you do that, people are going to get bad information on a regular basis as well, it seems to me. Anybody have thoughts on that?
If I can kind of weigh in there, and this comes from my personal experience as the National Taxpayer Advocate, but also representing taxpayers. I mean, they come in through the door with the most outlandish beliefs. And, a lot of people will just simply, you don't want to get into an argument, you don't want to get into a discussion. But I've never had a problem just saying to someone, well, let me try to explain from my perspective why it is that the IRS is doing this, or where you may not understand something. And, I've done national call-in programs where you never know who anybody's gonna, what people are gonna say. And it's really remarkable where in a one-to-one interaction, you pierce through that bubble. And so to Kathleen's point, I mean, when she was making that point about, literacy, but I think that the real message is retail. You've actually got to go outside of that bubble chamber, that echo chamber, and deal with people at a very retail level. And that goes to schools, that goes to interactions with people, that goes to IRS being out there in the community, which, in this environment may be very dangerous, but literally showing up in places where people are and letting them see you as human beings. At the Taxpayer Advocate Service, we used to show up at job fairs and have a table where we could help people resolve their problems with the IRS. And, we did customer satisfaction surveys that afterwards, even where we couldn't get the relief that the taxpayers asked for, they felt better about the IRS because of their interaction with the Taxpayer Advocate Service. And I think it's that retail, and that goes to leading the human in the loop, in those interactions. Yes, a chatbot, but at some point, you need that exit to a human being who is knowledgeable, sympathetic, understanding, and practical. And I think that's what we can all do that, but it's got to be like, everybody's dedicated to doing that, piercing that echo chamber. But I'd really love to hear Kathleen's thoughts on that.
Well, my last slide said I didn't know the answer, and I wanted the answers from you all. No, that's really compelling, Nina. And even, I mean, I've thought so much about social media, and I think probably part of the draw for people, and this is sort of highlighted by Caroline's presentation too, is that you actually have people on these, I'm telling you, like 5-minute videos. It's like a person, but some of it's bad information, but it is a person walking you through what to do. And people are watching those videos. But perhaps in person even trumps that. And I remember when Danny Werfel was commissioner, he came to UNC because he went to law school there and talked about how the IRS was doing these like pop-up kind of what you were saying, Taxpayer Advocate Service did. These like pop-up, go into communities and let people come ask questions. And the actual like in-person human, to me, seems to be the most effective. I mean, there's a limit to how much you can do, but it does seem to be the most effective thing of all.
Mm-hmm. When I was taxpayer advocate during 2016, I did, I want to say 17 or 18 public forums. I went around the country with members of Congress. I went to Red Oak, Iowa with the Farmers of America. I went to the Bronx. I went to, Los Angeles and Parma, Ohio and San Antonio, wherever a member of Congress wanted us to go. And we did these public forums where taxpayers just came in. We would have like 100 taxpayers in San Antonio, 100 taxpayers in LA, just coming in talking about their issues. And we had a panel, like a CPA and the member of Congress and everybody, but the exchange was amazing. And people coming up, and it did alter me too, to have that personal impact, of people just wanting to have their voice, but having a dialogue with them. And again, I don't know how you do that today when you've got people shooting and things like that. But I think that we have to find a way to do that. And the other thing I'll say, I'll give this example because it was a tech example and it blew me away. It was during the Biden administration, and the Department of Census was changing its descriptions of race and ethnicity categories. And they, there was guidance out about what questions on surveys the federal government could ask and and they were going to change those categories. And they held 2 or 3 virtual town halls where anyone could sign up for 2 minutes and talk on what they thought a category should be. And the chief statistician of the United States, which is a job we would all love to have, like I want that title, what a great title, was there with her senior staff. And they sat through 2.5 hours for each of those public town halls, listening to people. And there were scholars, but there were also normal people saying, I'm a descendant of slave and we need a separate category for descendants of slaves. It was amazing. And at one point during the 2.5 hours, the chief statistician came on and said, you will see some of us looking down. It's not because we're not listening. We're taking notes. And I thought, oh my gosh, what a recognition of, what just you're trying to give credence and an acknowledgement to the people who are taking 2 minutes to have their voice. Like the IRS could do that. The IRS could have done that with their strategic operating plan. That is what they did with direct file. They regularly went out to taxpayers all over the place and talked to them.
All right, Tony, do you have one?
So I guess
we have time for one quick
yeah,
question.
it's 11:15. It's really more of a comment than a question. I was just but thank everybody because this was really, really enlightening. But what's so interesting is thinking about just how the human aspect of it, even it's a program about AI, but it's the human aspect that was the thread through everything that everyone was saying. And we were talking at dinner last night about kind of the financial bubble with AI. But is there also almost like an expectation bubble about the AI? And that's, I think, going to Colin's slide where he had, the execs and the researchers are all all in on the AI and, basically everyone else completely mistrusts it. And does there need to be some kind of recalibration to get you somewhere in the middle where you're realizing that maybe, yes, this will be a tool to help automate things and make things better, but be realistic about what it can do at this point? Because, so our head librarian has been doing a class for faculty and staff on using AI to see, the ways that you could use it in your class. I've been in that class and like poking around and playing around with stuff. And it's pretty clear that, while it might not always hallucinate, like the stuff that I've been getting out of it when I ask it tax type questions has probably been like a step up above the videos you're watching, but like not far above the videos that like some of it is good, some of it is completely misleading, and some of it is very, very biased. Is not the right word. It's not like it's being biased, but it's like giving you part of the answer, probably the easiest part for it to find right away, and ignoring what actually is the biggest part of the insight. As someone who knows stuff, that I have to ask the second question of like, well, no, actually, I'm not interested in that. I'm interested in this very specific part of it that you totally ignored. And they're like, oh yeah, then I can tell you all about that. But you have to have that human aspect. You don't have to have the expertise to ask it the right questions. And it seems like that's the human aspect of it is still so important. And I really appreciated getting that from all of you.
You have to have the IRS staff to train the AI. And they're just not there.
And
they're not in the building.
Not even train the AI.
In order to incorporate the data that Nita was calling for on NTA audit recovery rates and that case law, all of that is human input into the AI systems, and nobody is there to do that.
Because I think it's even beyond the input. It's also looking at the output, what's coming out, and really being careful about what you do with it and how you do stuff with it. Sarah.
I think there's one of the things that I think there's been a lot of using the word AI here to encompass a whole lot of things. And I know that we don't have time for this now, but I think it would probably be helpful to disentangle that, because some of the things that we're talking about are, I don't think anyone would call AI. Like the IRS chatbot is not a large language model. It is a decision tree that you get led through. Josh Blank and Leo Sosky's book shows that. You can call that AI, but that's just saying a computer is AI. The audit is done by a formula that's been around since the 80s that is regression analysis, which I know some people say machine learning is just like statistics, but it's important to distinguish that from something like a highly specialized, like vectorized learning that might go to reading a check, to the general AI stuff that is happening when people input into ChatGPT. So there's all these different tools that we've been talking about. And I think if we sort of can separate out those tools, computers are useful in all kinds of ways. Not everything a computer does is going to fall under the idea of AI. So I think maybe what will happen over time is I do think we're in some kind of a expectation bubble, as tends to happen when technology, it's not a new technology in any sense, but it's a technology that's kind of breached, as Colin mentioned, sort of breached the limit and sort of breached general understanding. The expectations are up here. it's an incredibly useful tool. It's been a useful tool forever. This type of learning will have specialized tools. Expectations will come down. Tools will be specialized. Yeah, ChatGPT is not going to be able to answer tax questions, but there may be other kinds of more specialized tools that will be helpful. So I think we're up here now. We're going to come down. These are all really useful tools. We'll separate out what they mean, and they're not going away, but they're also, not. ChatGPT is not the specialized tool that's going to, do all these different things.
Thank
If
you,
I can
Sarah.
just add one point about trust, I do think that trust in AI is, in tax administration in particular, is also dependent on what country you're talking about. Because my work with African countries is, given corruption among humans in government, the populace trusts AI more than they trust the humans in government. And so, it's a very interesting geographic, cultural, experiential. You have to look at the context in which AI is being introduced.
All right. This panel exceeded my expectations. I really appreciate all of the participants. Thank you guys so much. It was far better. I have so many questions for everyone. There are snacks outside. I think what we'll do is come back at 11:35 instead of 11:30. We took 5 extra minutes, but I think we'll be fine in terms of moving that to 11:35. Thank you so much. Snacks out in in the lounge area, and we'll see you in about 15 minutes.
Bye, guys.
A fabulous first panel. Yeah, there we go. All right, we had a fabulous first panel. By the way, I'm Professor Hackney, Philip Hackney, the tax law professor here and chief faculty editor of the Pittsburgh Tax Review. Again, I want to thank all of the folks that helped make this possible. Christina Daub, who did the CLE, and Amy Change, who has been making sure all the snacks and everything work well, and Corey Parise, who did a lot of the promotion. So this next panel, I'm terribly interested in it. I'm trying to figure out how to incorporate AI into my teaching and what my students need to know and what they bring as an added factor as an attorney when you can do so much online. We have one of our former graduates who worked did work in our tax program, studied when we were here. She's a graduate of 2018, Tony Lucchini, from PwC, working as you are senior manager there, right, in the international tax space. So I'm going to turn it over to Tony and to introduce the panel, and we'll take it off from here. Thanks.
Thank you, Professor Hackney. So this next panel is going to shift gears a little bit. We're going to start talking about what we do and see in practice and kind of in education. And it's going to be a bit more informal. I think each speaker will come up and talk for about 10 to 15 minutes each. And then we're going to try to leave a lot of time at the end for some Q&A. So if the audience has questions, please raise your hand. I have questions up here, so there will be no loss for questions. But we do want it to be as interactive as possible. So our panelists, first, Jay Saled, who is a professor and director of the Masters of Tax program at Rutgers University, will be coming up and talking about his most recent publication. I think it's going to be published here shortly, or it was recently just published, Tax Advice in AI. Darren Campbell, a partner and the tax technology and transformation leader at EY, will come up second, and he's going to just talk about his role as the tax technology and transformation leader and some of the shifts that we have been seeing due to AI in the profession more recently. And then Todd Castano, he is virtual with us. He's the head of global valuation, accounting, and tax, and an executive director at JP Morgan. And he's also going to chime in with kind of what he has been seeing in practice and in his research related to AI. So we have some really, really great participants up here. I will guide through the question and answer, but I will turn it over to Jay to talk us through his recent publication.
Chris, you're gonna. Jay is first.
Over here.
Apologies. You're all set. Good. First of all, good morning, everyone. Thank you for coming. Tony left one part out, which is you're supposed to have fun today. So I'm going to try to fill that void today. I'll see if I measure up, but thank you again for housing this symposium. I want to share with you that this is not my first rodeo with AI. I've worked on 2 prior papers dealing with AI. The first dealing with Kathleen, who gave this morning's opening lecture about AI and predictive analytics, because most of you know that when you submit a return, and I always feel like I'm in the classroom, so I feel like the tax students here, I should ask, what is the threshold when you submit a return? What level of authority do you need? And I'm looking at the students, and you're supposed to know this, but it's substantial authority. And you're supposed to get to about a 40% level of feeling that you're comfortable with the submission, that there's at least a 40% or greater chance that you're going to be successful. And if you don't meet that 40% threshold, you're supposed to submit returns with a reasonable basis and disclosure and have at least a 25% chance of being successful. And sometimes when you deal with tax shelters, you're supposed to have more likely than not. So you're supposed to be greater than 50%. And AI, Kathleen and I discuss that whether or not AI can help predict. I mean, AI does a lot. And maybe if you submit the correct prompt and you put in the right facts, AI can help dictate whether or not you've reached these thresholds. So that was paper 1. Paper 2 dealt with the issue of AI and valuation, because we know in the Internal Revenue Code, there's a lot of valuation issues, whether it be in the charitable realm, estate and gift tax realm, and AI can help propel perhaps proper valuation. And instead of having or forcing taxpayers to hire experts, that AI can help navigate prices. So that's second paper. Third paper is this one, and I have a fourth paper just in the gestation phase about dealing with AI and malpractice issues. So if you guys invite me back, maybe that will be the next round. But today, everyone's talking really high up here, and I said I'm going to get down in the weeds, in the mud, and get much more granular, and something everyone in this room can relate to. So this is not something, well, I never deal with the IRS directly or what. Everyone deals with tax advice. We all get tax advice, good, bad, and indifferent. And increasingly, people are turning to AI. And I just point out background that, hey, things are complicated. No one's going to say this is simple. And for decades, taxpayers have turned to tax professionals like us in this room, tax academics, CPAs, lawyers, and they sought tax advice. All right. And then there's been an increasing trend to turn to tax software programs, right? That we all rely on TurboTax and our other tax software because it comes a hell of a lot cheaper, right? And turning to tax professionals. I point out that the billable rate, and I should ask these folks here, do you mind? I guess we're being recorded, so you may not want to say this, but you can say, what do your friends bill out at? Because my understanding is a lot of people start at $500 now per hour, and some of my brethren, friends in New York City are billing at $2,000 an hour. So tax advice does not come cheaply. Is that a fair statement? Okay, so, and I'm going to say that taxpayers do want to know their tax burden, and I'm going to be a little bit Pollyannish when I say this. I think in the heart of most U.S. taxpayers, they want to bear their full. I mean, they can get away with something maybe, but they want to fulfill their civic duty. Okay, at least again, maybe Pollyannish on my part, but they want to do that. But what they don't want to do is pay penalties. Okay, that's for sure. And most of you, particularly I turn back to the students, should know that the penalties are generally, well, they come in 2 different flavors. One pertains to if you file late it's 5% per month. If you don't pay your taxes on time, it's 0.5% per month, up to a maximum of 25%. We're not dealing with that this morning. We're not dealing with those automatic penalties. We're dealing with primarily what's called the accuracy-related penalty. That's Code Section 6662. That penalty percentage, generally 20%. In egregious cases, it's 40%. That's what taxpayers want to avoid. And we as tax professionals want to avoid, because what happens if those penalties are imposed? What's the first thing that the client does? It blames us, right? So we certainly don't want our clients. And by the way, I wear two hats. Not only do I teach tax, I practice, and I know what keeps me up at night is the fear of penalties, not my own, but my clients, because they're going to say, hey, Solid, it's your fault. So, there's this code section that taxpayers regularly turn to called Code Section 6664, and it's the reasonable cause exception. And it's one very heavily relied upon. But you can't just say it. It's not like an abracadabra, right? You can't just say it. You have to meet, in this case, 3 criteria, and they're conjunctive. It's not, hey, 1 out of 3 is good enough, 2 out of 3 is good enough. No. You got to meet all 3 of these criteria. And it's not always easy to meet these criteria, but historically, taxpayers can. The advisor was competent, the taxpayer provided accurate information, and the taxpayer actually relied on the advice rendered, right? So you meet all 3, you get to get out of jail free, all right? It's get to the promised land. More recently, there's the so-called TurboTax defense, where people say, gee, it's not my fault, it's the computer's fault. Now, this slide is somewhat misleading, because if you look at this slide, you would say, gee, 50% of the cases went in the taxpayer's favor, 50% went to the IRS's favor. And Kathleen would say, this is fake news. No, not true. I had to look very hard to find the 1 or 2 cases out there where the taxpayer prevailed. So that's a very, very small sliver of what happens. The majority of cases, courts had no patience for taxpayers saying, hey, the dog ate my homework kind of psychology. No, you can't rely on TurboTax and say, get out of jail free, all right? That has not been a winning strategy in general. Once in a while, yes, but in general, no. So now we're going to enter a new world, right, of AI. And this is going to be transformative because, again, no offense to my brethren tax practitioners, comes a hell of a lot cheaper than they do. And I'm going to say, I think Phil said very early on, he's no expert, right? He's a Luddite, fellow Luddites. I'm a Luddite. So I don't want to look under the hood. I want to tell you what goes on under the hood. I can't tell you what goes on under the hood. I can describe the hood, and many of you know the hood. You know there's different platforms to use. And the secret ingredient from what I've listened to a lot of continuing education classes. I've read several books on AI. Everyone talks about the secret sauce, and the secret sauce is in the prompt. And the prompts are supposed to be, hey, tell AI what role you want it to play. Do you want it to play the role of a tax academic? Do you want it to play the role of a tax advisor or CPA? Do you want it to play the role of keep it simple. I want to just know in layman's terms what the outcome should be. Then you got to tell them or tell it the task at hand. What are you looking for? And finally, hey, how do you want it, the deliverables? Do you want it in outline form? Do you want it in prose? Do you want how many pages? Those are the 3, what I've been told, central ingredients. And, I don't know how you guys approach this. That's how I generally approach when I put in a prompt. That's my go-to. And we know that AI has this sort of dual role we saw this morning. On one hand, it's used by the IRS. Why? As a form of detection. It's a form of educating taxpayers. So it serves the IRS role as an agency, but it also helps taxpayers, right? Assists taxpayers and taxpayers have turned to AI increasingly to help resolve their issues. Now, here's the issue that I'm going to raise today in this answer, maybe next week, next month, next year. It's going to be very different from what you say today. Can AI serve as a penalty shield? Okay, let me be full disclosure, there are no reported cases yet on this issue. There will be, I promise you, there are none. So if you're going to invoke this strategy or defense strategy, right now it's somewhere, I think, between relying on seasoned veterans to my left who really know their tax information. And part of it is embedded in their costs. If someone's willing to spend $10,000, $20,000, $30,000 to get an opinion letter, that shows some good faith. Like, hey, I know there's a lot at stake here. I'm going to invest that sort of money. Versus someone who just does it themselves, which doesn't show, if the stakes are large enough, such good faith. And now we're going to have AI somewhere in the middle. I don't know where in the middle it is, where taxpayers are going to start relying on AI. And just to try to bring home this point, Linda Galler, who I co-authored this paper with, we ran what you might think is a simple query for the, again, sorry, tax students, I keep looking in your direction, but this is a simple 1031 exchange where we all know that when you exchange property, there's a code section 1001, that all gains and losses are supposed to be recognized, but there are exceptions. It is the Internal Revenue Code. And in this case, we're exchanging a house with, or not a house, a business property with a basis of 100,000, fair market value of 500,000. We all know the embedded gain is 400,000, right? We know that. And they're getting back property worth 450 and cash of 50,000. And we asked AI, what is the tax basis? And you're supposed to, everyone in the audience is supposed to think, gee, what is the tax basis? I'm not going to call anyone. Well, I could. Cooper, I know your name best, but I don't know. Do you have an answer? I could call my seasoned veterans, but I won't. And the good, Bill, what were you going to say? How much? Okay, look, Phil, I would say result one is this is two different results AI produce. And the first was 150, but that's not right. Okay? Because keep in mind, you have new property worth 450, and you know the total gain must be, we said 400,000. We already recognized 50, so we have to have an embedded gain of 350 to preserve the overall gain, right? So, and if it makes you feel any better, Phil, the next slide, Linda, AI came back with a new basis of 400,000, even a more egregious mistake. All right. And by the way, Phil, mentally, when I first thought of it, off the cuff, I thought 152, if it makes you, all right. It is 100, okay, just for the record, because that preserves the overall gain of 400,000, all right? I just want to point out that taxpayers reliant in two different instances with two different platforms would have both gotten it wrong, one less so than the other. But it's a little bit scary to see this, but that's where we are today. Again, next week, next month, next year, the results could be better, maybe better trained data. I don't know, but I suspect that will be perhaps the case in the future. And you were going to say, I don't remember which platform we use for each. I will say, and I've told Phil and others, when I do practice, and I've been practicing for years, my clients, and I don't know about your clients, are increasingly taking my documents and running them through AI and coming back and critiquing me a bit. Now, and some of the critiques the AI is producing is really good. It's not the stuff of first years just learning. It is middle associate level. And again, very sophisticated critiques. They've downloaded my charitable remainder uni trust. They downloaded just a regular irrevocable life insurance trust, and each time coming back with pretty things that were not just rote. I mean, obviously they were just rote, but they were sophisticated rote. Very, very impressive, scarily impressive. My clients fortunately didn't fire me. They said, "Oh, these are questions I should ask." So I was hardened by that. So I'm going to say that the jury is still out on AI in terms of reliance. It's not proof positive, but it's something we know in this room. It's going to be something that is going to happen, and there's going to be tens or hundreds of court cases dealing with this because it is such a cheap plan B. And then my final slide is just, it's not the first bullet point is not legislative. I mean, it's a no-brainer. I don't know who reads IRS instructions these days, but the IRS should issue a warning, okay? Just tell the world, be careful about using AI because it is not foolproof. And just put that out there because as these cases go to court, at least the IRS can say, look, we've told people that there's problems using AI. But in terms of legislative solutions, or at least maybe the Treasury Department on its own initiative wants to point out that if you do use AI, that you have to akin to a reasonable basis standard, you have to make what's called a disclosure statement. And there's a specific IRS form, a Form 8275, in which you make this statement and say, hey, I'm submitting this return. I used AI on the following date. Remember, AI every day could change the outcome. So you want to tell the IRS in good faith, hey, this is when I submitted my query. This is the prompt I used. This is the result. And I'm relying on this. Okay, now the IRS can at least evaluate what you did and what you submitted. It gives the IRS at least a fighting chance to decide whether or not there is reasonable cause and you exercise good faith. Now, should that be done legislatively? I mean, my gut instinct is yes, but you guys may differ with me. There could be, I don't think this is feasible, where Congress would say you can't use AI as a defense. It just categorically says, just like we know with substantial authority, you can't use treatises or other articles as a basis of substantial authority. The government could just prohibit its use and say, point blank, AI is not to be used as a reasonable basis. So I can leave it up to you in discussions, but that's where I'll leave it. I don't want to. I love Kathleen. I didn't want to leave you empty-handed. She didn't have any good solutions. I'm not sure if these are good ones, but these are possible solutions. I don't know if we're going to take questions now or if you want to go on to the next speaker. I'm going to defer to your judgment. Shoot.
Thank you. Or what level? Oh, it is? Okay. I guess because having zero idea of any of the, like he asked what platform. I don't even know what he's talking about.
Chat GPT is one platform.
Yeah, you had like Claude and Llama
Yeah.
and Gemini. I don't know what those, I mean, I understand what they are. I've never been on them. But I guess my question is, since AI seems to be this huge, all-encompassing idea, how do you limit by just saying no AI?
I didn't say, look, you're never, just like my students, I'm not going to stop from using AI. So here's a recognition. They're going to use, just Google now in its prompt allows you to tap in AI. I can't tell people, no, you can't use it. But I just meant not to use it on a tax return as a form of, you can never invoke it as a form of reasonable cause. Now, I'm not sure that's the legislative solution I want or you want, but the government could say that's never going to constitute reasonable basis, reasonable cause.
It's interesting because I have a penalty abatement case pending right now, and I was talking to Kathleen about it, about something, her presentation had to do with being sucked down a rabbit hole and all of those.
The doom scrolling on TikTok.
Yes. Where he got caught up in the sovereign citizenship craziness and the documents that were being sent to him and all of these crazy things, would that be considered AI? For him to have filed a tax return using that information?
I mean, I have to say, I don't know. I don't know underneath the hood, but Cooper, see, knew I gotta call you. Oh, go ahead. There's the mic.
I just had the question of to what extent do you think this is an issue of specialization? Like eventually we will get to the point, we might already be at the point where there are AIs developed specifically to do tax returns, specifically for simpler tax returns. Is there a point where we, as the government, create a list of acceptable AI models to use rather than just plugging it into Anthropic or Gemini or whatever to do tax returns?
I can see that happening as a trend. I mean, there are some countries, I understand Great Britain, that tax returns are prepared, and Joe Bankman, his free file, the notion is low-income taxpayers, that it would use all the information on 1099s and W-2s to fill in tax returns and hand those pre-filled in tax returns to say, if it's right, submit it, sign your name. If it's wrong, toss it and start again or modify it. And I don't know, to your question, if that's AI or not, these pre-filled in self-populated returns. But I could see a world in which AI will do this on behalf of the government. Right now, there's people like Glover Norcross who want tax to be harder to do because there's certain people who want you to feel the pain of completing your tax returns, because just like Easy Pass, people say it's not good because you don't feel the pain of the tax the state is imposing because you make it too easy. So to answer your question, I don't know if there's a political headwind stopping that from happening. So
yeah, just if I can comment on that, if we look at the tax administration in the kind of U.S. versus the rest of the world, we have put together a kind of a chart on the maturity or advancement of the tax administration, and the U.S. is one of the kind of furthest behind of developed countries on our tax administration. It's like Mexico several years ago. They went out and hired a team, and they had about 600 data scientists that rebuilt and revamped the way that they do e-filing, e-invoicing, getting towards what you're describing as kind of the pre-filled form, because they already have access to so much information through all the filing that's happening. And we see that trend happening around the world. And there's certain countries that just like China and Russia that are the head of tax for Russia is actually not an accountant, not a lawyer. He's a data scientist. We had one of our teams had met, and he said in his view, tax is not a legal issue. It's a data issue. But they've gone very much more towards a data-driven approach. But again, it's a country where they're able to get direct access to companies' financial systems. Something that's I don't see that in the future here in the U.S. So there's some different challenges. But around the world, we are seeing this shift where it's a change of the compliance is being handled by the tax administration, and the taxpayer, the responsibility for controversy is being placed on the taxpayer, and the windows are being shortened as well. So in Mexico, you have 10 days to respond. So if you get a kind of a notice from the government, or they've gone through and kind of done some of their preparations and they're assigning adjustment, you have about 10 days to respond to that versus what we have here in the U.S. So there is this kind of shift of both where the responsibility lies as well as timing, how quick tax needs to happen.
I don't know. Any other questions?
You were talking mainly about people using it as a defense. I was wondering, because you mentioned before about, kind of like from the tax lawyer perspective of, putting together the opinion, or just your not like a written opinion, but your opinion about kind of the level of comfort that you feel. And we use percentages, like you said, substantial authority is about 40%, more likely than not, it's about, like more than 50%. And that's all not well and good in the fact that it sounds objective, but these are all like really subjective judgment calls. Do you see that can be hard to make? Do you see any role for AI at some point in helping to kind of back up a lawyer's sense of, or maybe give them some more comfort about like where they are on that kind of spectrum
Absolutely.
of
My first
advantages?
paper with Kathleen delved into predictive analytics and the fact that AI, look, we as professionals are being paid to come up with a certain result. And we know from the tax shelter era, when you see things through people who are paying you $2,000 an hour, you want to come up with a result which says, hey, this works. And you get lulled like sirens into the rocks because you want to see these tax shelters as more likely than not because who's paying your bills? Whereas AI isn't being paid to come up with the answer that you want. So I do see, to answer your question, that it may be, look, AI has biases for sure, but it may be more disinterested, objective than us who are being paid to come up with an answer, just to respond to your question.
I think it gives you more depth and breadth into what you can look at a lot faster and more efficiently, right? So like, I know Bloomberg has an AI feature on BNA now, and you can research a topic in there. It gives you kind of its recommended answer. It links you to your BNA profiles that you can use and some trusted sources. And so we're seeing, at least at PwC with my associates, they're able to find things a lot faster, and the depth of what they can find quicker than before AI, especially if they're not trained to use a lot of the research tools and things like that, right at the outset of starting. And so I think it's giving people more access to more things, right? Like maybe in 2 hours, I could only find 5 cases to support my position. Now in 2 hours with the right prompts, I can find 15. And that's helping to build that confidence. And so I think it's all in the use of the AI and figuring out how to make people really good at prompting your AI to give you the information that you need and using trusted and verifiable kind of sources to get those answers.
And I don't want to take away from anyone else's time, so I'll take a seat. Thank you very much.
Jay, am I on here? Oh, there we go. Is that better? Okay, good deal. I said, Jay, you said there wasn't any tax examples yet, but we do have some legal ones. So May 2023, there was a lawyer that filed a brief with the federal courts using generative AI, and 6 of the cases in the brief were made up, or hallucinations. What I loved was his defense. So we also have an example of how he tried to say, hey, I used AI, and my defense is I used AI. So in his follow-up affidavit, he initially said, well, I asked the AI if these were real cases, and it told me that they were. And then later he concludes that he said it has been revealed that the sources have been revealed to be unreliable. So I think that was his own conclusion. We are at an inflection point in tax. I kind of describe what we're going through now as the second digital revolution of tax, and the first ties back to a software that was first invented in 1979. And so again, we talk about reliance on software in tax, but does anyone know what was invented in 1979 that transformed how we do tax today? So it's the #1 tax software in the world. And any guesses? What's that? No, not TurboTax. It's used way more than TurboTax. Excel. Yeah, it's a spreadsheet. So it technically in 1979, it wasn't Excel, but it was a program that was called VisiCalc. So what this did is before VisiCalc, before the spreadsheet, if you wanted to program a computer, you had to be a computer scientist. You had to know a programming language. With the advent of the spreadsheet, we turned our tax professionals or accountants or business people into computer programmers. Now we can develop tax applications on our own, and it's something that as much as try as we might, through generations now, we've tried to shift people to different software for accounting and tax, and they've continued to hold on to Excel because it does a few things for us, but it's something that's very flexible. So as tax law changes, it's something we can very quickly go in and adjust. And then there's also traceability or auditability. So I refer to that as like the first generation of digital tax. And as we went through the first generation, I came into the profession just a little bit on the late side of kind of this first generation. But the issue we were talking about in the prior session about trust, that also existed with the adoption of spreadsheet, moving from ledger to spreadsheet. When I first started with EY, I had a partner that did not trust the sum formula in Excel. So when I would put together a spreadsheet, I had to print out the Excel spreadsheet. I then had to pull out my 10 key, which was a resume item at the time, and run a ticker tape to demonstrate to him that the sum formula in Excel actually tied out. And so as we're moving into the second digital revolution for tax, we're in kind of that similar period. We have kind of this new technology that we're filling out. We're trying to figure out what the governance needs to be around it. Do we trust it? Do we not trust it? So I feel like this is something that as I'm working with clients and we're helping them think about the journey into the world of AI, that I often use this as an example to say, for many of these, the VP of tax today, the tax executives, they lived through this first the first digital revolution. And there's, I think, a lot of parallels and lessons that can be learned between the two. One of the other comments that's kind of come up was about, and again, the end of the last session, like what do we define as AI? And one of my favorite quotes about that, it comes from John McCarthy. So he's one of the individuals that's the godfather of AI. But he says, as soon as it works, no one calls it AI anymore. And I think we even heard that where he said, like, machine learning 5 years ago, machine learning, that was AI. That was kind of the pinnacle of AI, that and neural networks. And now that we have generative AI and LLMs, it's like, so that's real AI, and machine learning is more statistical. But that is a trend that I think is going to continue. So there is a broad definition that falls under this AI bucket. We tend to call kind of whatever is the latest, newest thing, AI. But as we look at Excel and the journey that we're on, and this journey that we're on next, again, I'm a student of history, but another example of this that I think fits well to what we're seeing and experiencing in the professional services realm, as well as in the client tax function, ties back to the second industrial revolution. And this was the move from steam to electric. And so I'll create this parallel because then when I talk about what we're seeing at clients, I think it fits into where this journey is. But when there was first the move from steam to electric, the way that manufacturing plants were organized for steam, they'd have this large steam engine that would sit outside the manufacturing plant, and there would be this transaxle that ran across the ceiling of the facility, and then there were belts that were attached to the transaxle that powered each of the machines. So when electric engines came out, all they did is they swapped out the steam engine with the electric engine. And then the initial comments were of skepticism. Well, an electric engine doesn't have the same torque as a steam engine. So they're like, yeah, I don't know if this is really any better. And it took almost a generation, took almost 30 years for companies and managers to recognize the power of electricity. That now you didn't have to have this large engine sitting outside the plant. You could actually attach a smaller, more efficient engine to each of the devices and allow you to reorganize your manufacturing floor based on the efficiency of material flow and other things that allowed you to gain a lot of efficiencies. And that's a bit of the journey that we're on in tax today as it comes to AI. This isn't a matter of just swapping out. You can take it and you can take your existing processes and you can swap out and introduce AI in different parts of the process, but that's not transformative. That ends up kind of solving a particular pain point But it's as we look at kind of where expectations are to where kind of reality is, the two biggest things that are getting in the way of getting to the vision and transformation is one is process. We need to think differently about what our processes are with this new technology. And then the second is actually availability or accessibility of the data itself. Tax is very, very rich with data. It's I think in the future, tax is actually going to be kind of one of the parts of the organization that companies are able to go to get data about their entire organization. We're already starting to see that. So my prediction is that in the future, a lot of our chief data officers will likely come from the tax function because of the volume of data that tax has to get across the organization. It's not just financial data. We deal with treasury data, and it's payroll data, it's operational data, has a ton of data. The challenge that we face today, though, is that data is trapped in a bunch of silos all over the organization. And with data really being the fuel for AI, if it's trapped and you're just trickle feeding your engine, it's not going to be a very powerful engine. And so those are the journey that I think that we're on right now is as I work with, so backing up, the role that I play at EY, I lead our America's tax technology and transformation practice. So it's a team of about 800 individuals across the Americas. We have a team of about 800 that's offshore that supports that team as well. And we're primarily working with a client's in-house tax function and helping them around people, process, technology, and data. So we'll go in and we'll help with tax function assessments. How should they be organized structurally? How should they organize around tax types or geo or kind of other ways? So it's the organizational side, but then it's also helping them with the implementation of software. So whether it's compliance software, provision software, as companies are going through, a lot of companies today are going through large ERP transformations, their enterprise resource planning system transformations, and we're helping them making sure tax is a seat at the table so that those systems are better sensitized. So tax has access to the data that they're going to need to operate their function. And as it relates to AI and technology, we're helping them design and plan out what their technology and AI roadmaps and data roadmaps, what those look like. As kind of another hat that I wear that's kind of because of this, the main hat that I wear at EY is I'm also involved in a lot of our talent development. So I work with our talent teams in both developing out career paths for some of the non-traditional skill sets that we're bringing into the profession, as well as kind of the education. How do we uplift the education of all of our existing professionals? Because unlike, I think, my example of Excel where I started, because of kind of the speed at which that was adopted, that partner that I've mentioned that I had to print out and create the 10 key, there was, because of the speed, he didn't have to adopt. He had to say, I'm going to retire before I have to pay attention to this. The technology now is moving so quickly, that's not an option. Even our senior partners, unless you're retiring this year, and I'd even say if you're retiring this year, it's something you have to be aware of. You have to understand what questions you need to be asking and ideally using the technology yourself. As we see clients beginning to go through the journey, I typically lay out a kind of 3 steps of the journey for them with the first, and actually take it just a step back. We do a survey every year that goes out to about 1,600 VPs of tax and CFOs. We call it our Tax Finance Operate Survey, TFO survey. And the latest one should be released like in another month. In the 2023 survey, and this was kind of right after a lot of the boom around ChatGPT had come out, we had asked the question, how significant, we asked the question, how significant do you think the impact of AI will be on tax? And the response was only 15% of the respondents felt like there would be significant impact. The very next year, so 2024, last year, when we asked that same question, and it had almost flipped 180. We had 87% of the respondents said, yes, I think it will have a significant impact on tax. So only 13% that still were skeptical. But as we've laid out the journey, the step one, the 3 steps that I usually talk about is step one is introducing digital assistants. So those are things like Copilot and ChatGPT and those things that are kind of help you with the self productivity. And those they're very good for getting people hands-on and getting experience, learning how to prompt and get some of the results back, how to evaluate those. It's very difficult to identify an ROI based on those tools. So as CFOs, a lot of CFOs are putting pressure on VP of tax about like what's the ROI. So it's a great kind of intro step, but it's very difficult to quantify what exactly is the benefit. I'm 10% faster at getting through my email. Like how do you quantify that? What's the value of that? It's difficult to quantify. The second stage is, and most companies where we are today is just about every company that I work with has some type of in-house ChatGPT, or they're using Copilot or something else. There's something that they're using for that, like the digital assistants. That's almost universal. The second stage is where they've solved a particular pain point or problem. So maybe it's something with they're dealing with sales and use tax, and where you need to get a product in the correct category. There's a lot of things in tax that if we get it in the correct bucket, then the rules are kind of automatic. And again, this is the traditional machine learning is pretty good at this. So that coupled with generative AI that makes it easier for the practitioners to use is something that we really see as that second stage, where they're using AI to solve a particular problem. And again, a lot of those that we see is something in the classification. So it's coding trial balance accounts, it's coding products for purposes of VAT or sales and use. And then the third stage that we don't have, there's very few companies that are very far down the path of getting to what I view as kind of stage 3 is more of the transformative AI. And again, the barriers that we've seen for that is both process and data. So there are a lot of companies that have begun that journey, looking at how do we think differently about our processes, and what do I need to be doing to bring my data together in a way where it's more generally or centrally accessible. So I think I'll pause at that point. We'll move on to Todd's introduction. And then I think as we get into some of the questions, I'm happy to answer some questions now, but we can get into some more general questions where I get some of the other experience I've had in those spaces will come out as well. Right. Todd, over to you.
Great. Can you guys hear me? Awesome. Apologies for not being there in person. Had a bit of a conflict, unfortunately, but this is a great conversation. So just a little background. I'm not a tax attorney. I did stay at a Holiday Inn Express last night, so maybe I'll pretend to be one. My background is I was an accountant. I actually did tax accounting at Deloitte for a few years, and then I run a group at Morgan Stanley that works with institutional investors. I guess it's been 16 years. And so I try to translate accounting and tax information to people who are not accountants and tax accountants and tax lawyers, so they can make better investment decisions. I also have a number of roles in terms of technology and using AI, and as well, I think where I kind of wanted to go a little bit is we're a professional service firm as well, and we're using these tools. So I think there's a lot of Venn diagram overlapping of how we're approaching AI, and so I have a kind of a key training function, onboarding function of new talent. So I kind of want to hit on the talent side a little bit. But maybe I'll start is, I think we think this is a real technology. I think we're early innings. We're starting to actually see the benefits. With the first couple speakers, we also see the same constraints. It's a trust but verify problem. And that kind of gets into the whole talent side of the equation, where we need to, rethink, and we're rethinking constantly of how we train our new talent, and even the talent that are interns and folks in college, of how they use these tools. And most importantly, I think, both speakers is that trust versus verifies. How do you solve that problem? And it's both a people problem or challenge, I should say, and technology challenge, because these models all adapt. There's different models for different purposes. I thought that comment about Excel, I was going to use that. So we have 5 versions of Excel, and each one changes every day, and that can become very challenging. The other thing I think we've learned, just from an institutional standpoint, I'm actually stealing this one as well, is the concept of a F1 race car. So you can have the race car be the next version of GPT, but the person in it has to be able to drive. So if I put my 11-year-old in an F1 race car, she's going to go right into the wall. And then I thought the concept of, I'm not a big F1 race car fan, but it was communicated to me is the fuel and the tires and how you balance those is how you win the race, right? So the data is the tires, right? And so organizations that have the data and have the right driver and the right engine, that combination, you're starting to see the most benefits. And what's interesting to me in our business is actually it's the more regulated industries who have tires are able to put a driver into the car and able to accelerate. So that's financial services, that's healthcare, biotechnology, where you've already had a strict kind of regulatory capacity over those functions. You're able to accelerate. Other industries, such as retail, where you might have more disparate information and data in different places, it's harder to pull that back. It's harder to control it, et cetera. The other thing we're learning is increasingly related to that is organizations are starting to basically box in their own version of LLMs. And so I think the question came up earlier is, do I have a specific tax LLM or a biotech LLM? And that almost is the new IP. So I also agree with that concept. We call it AI, but it's actually just all encompassing. If you're going to have a competitive advantage, you're going to have to own the whole ecosystem. And that's what we're doing here. But we're also using all the tools. And so that can get complex. For our new people, even our senior people, you are almost being monitored and watched is how many times are you hitting these tools and how are you using it? And actually, more importantly, is what feedback are you getting so we can train our own models to get the output that we need and reduce that level of risk. Let me pause there. I'll share my screen. Just a few other slides. I won't take too much more time for Q&A. We did look at I'm going to play this both ways. We did try to build a model that looks using AI to look at kind of what is the employment risk and where does it sit? And I guess what is the benefits to that? And so we see kind of a $920 billion run rate that could translate, I'd say at a very bull case, a $13 to $16 trillion value creation potential. Now, some of those jobs will go other places, but it's really trying to measure what that productivity is and looking at the future of work. What we see here is probably obvious if you just think about it, but healthcare services, transportation, consumer services, software, I'll get back to that, cap goods, autos, particularly with robotics coming online, is kind of where we see the most benefit overall. So this is how we put a scorecard together. Interesting, I think more professional services are further down the line, which may be counterintuitive. We're also seeing that, for instance, which may be hard to see on the screen, is we wrote a report that actually we're going to need more developers, because as we start to implement AI, we will get some savings, but the people equation is not going to go away. And I think even from the accounting and tax profession, as our previous chart showed, that's the case. And so this just kind of shows, in some sense, AI is putting more stress on the system, you're getting benefit in terms of coding. That's very clear. Anybody can go use Codex on ChatGPT, and all of a sudden you have no idea how to write a Python code, and it does it for you, and it's actually pretty good. But it's very similar to the conversations earlier that if I'm actually going to file a return, it's the kind of same thing with software, and you're actually potentially introducing different stressors into the role, just at different types of tasks. So I think that kind of like sums up that yes, there will be some job elimination, but you're going to need more people in different areas, and I think that's probably completely accurate with tax as well. Let me shift gears a little bit more on the macro side. Kind of what we're seeing is, here's a chart of, in terms of corporate tax policy. I just kind of want to hum a few bars on this. This is the effective tax rate going back since 1962. This is the cash tax rate, so it adjusts for the differences between cash taxes and GAAP taxes. And with the OBBA, we're starting to see probably a floor, is my guess. We'll see Q3, Q4, Q1 in terms of corporate tax revenue. Now, where this kind of all ties together is the biggest beneficiaries are primarily the biggest AI companies, so the hyperscalers, as we call it. So as they put more CapEx in, they'll get more R&D deductions, more FDII that goes to selling IP and AI overseas. So you're going to start to see downward pressure on corporate taxes. I think the other thing we're already starting to see, is with all these data center build outs. Yeah, it's great jobs for the next 2 years, 3 years, 5 years. But there's also stresses on those ecosystems, and that's becoming more of a debate in the market as well, is where do you get the energy? Where do you get the water? How do you tax that? Right. So I think you start to see some level of AI taxation, excess taxation, that's going to start to be a little bit more pervasive, I think, even both in red and blue states. And the other charts keeps him up at night. So I tried to map out all the different contracts with all the different companies in the ecosystem. And so this kind of went semi-viral this week. But as tax professionals, what I would say as an accounting professional is you're starting to see a lot of, obviously, circularity, which this chart clearly shows, but also a lot of innovative transactions. We're starting to see a lot of take or pay contracts. We're starting to see a lot of SPVs, off balance sheet financing. So not trying to hit the 1999 alarm button. This all probably will work out well, but you're starting to see a lot of different types of financing vehicle structures that are very innovative, and that's been in the press. Certain players have said that in the press, and so I do think from a tax perspective, it's interesting to think about the evolution and everything we discussed, but also an innovation in the way that we finance this innovation. So maybe with that, I will stop sharing and pause.
Able to answer the questions. So I'll open the floor up. If not, I can start asking questions and you guys can chime in with other questions as you have them.
I don't know if Scott can hear me, but Scott, at the very end, you alluded to the fact that at some point, Todd, did I say Todd? Todd, I meant.
That's right. My brother's Scott, so it works.
Todd, so at the very end, I think I heard this, and I'm not sure what you were alluding to, that at some point AI would become taxable. I don't want to put words in your mouth, but I thought I heard you say that, and I wasn't quite sure what you meant by that.
Yeah, I mean, I've had conversations with policy folks that at some point you might need to have some sort of AI level of tax, and maybe you can conflate that with like UBI concept, but likely more on the state level first. But if the corporate tax base and the deficits increase, and you have a concentration of that last chart I showed, where profits concentrate with a few players, you could think about a different source of revenue versus the corporate tax.
Yeah. Yeah. One area that we've seen this coming up is when we talk about robotics, that the kind of one of the new terms around that is physical AI. So that there is a lot of discussion around as there's potential disruption in the labor force and it changes the labor force around this. How does that change some of the tax policy to drive tax collection? So South Korea, they actually introduced a robot tax already. So in a way to where they're trying to capture revenue for activities and jobs that are performed by robots. Some California has actually been looking at that. I was up in San Francisco earlier this week, and the number of like Waymo cars that are driving around San Francisco is pretty crazy. But I think that is something that we'll see in some of the European parliaments are also looking at this, recognizing that AI is going to change labor, and so when you're looking at like some of the measures and metrics, you can see like some of the disruption that may have to things around different types of like employment tax and other things. So we're to Todd's point, like some of this is real. Like South Korea is already starting to do this, and
what does that look like? Like it's doing it, but what is it?
Like how are they taxing it?
Yeah.
Well, it's like a digital services tax.
Yeah, well, I think there's and again, the what exactly is something that's up for in debate. So, like, how do you actually tax that? So, are you taxing it based on like units produced? Does it have something to do with like usage or hours?
It's not an income tax. It's a
right
sales tax, or I'm just trying to get my head wrapped around it.
Yeah, so it could be like again, I'll pick on like the some of the driverless vehicles. So that could be a tax that's based on like operating hours or something that's associated with the use of AI, or again, physical AI is kind of the new buzzword around that.
I think also like the users tax is everyone has a water meter and an energy meter in their home. And so if you have a data center, it's very easy to regulate that and to measure that and tax that.
So this is kind of both for Todd and Darren. You both mentioned that data is key, and it suggests that the greatest competitive advantage is going to come from whoever has the highest data set. And I'm just wondering, what implications does this have? I mean, I think this relates to what you're talking about here in terms of you might need to think about it as a UBI almost in a conceptually. What implication does this have for business competition going forward, and frankly, where governance is going? Does that make sense? Like, who grabs the data matters a lot.
Yeah, and I can speak to Todd, may I start out, and then you can add in. But yeah, this is something that I think all the professional services firms that we're looking at, because there's and all of our clients are looking at this as well, because it's kind of who owns the data, where does the data sit? So at the same time, we're getting kind of questions from our clients about, you have a lot of our data. We're expecting you as our trusted advisor that you're going to be coming back to us and giving us advice based on that data. On the other side of it, the initial reaction is we don't want to give you any consent to use any of our data because we're worried about kind of the data protection, and if data is where the value is, we want to make sure we're keeping that inside the four walls of our organization. So, I mean, what we're seeing right now is I don't think that answer, at least in the way we're acting, has been settled, but there is kind of this fluctuation. So I have some of the clients that in our contract language, we do have language, kind of standard language or a clause that we now have in all of our contracts that talk about the permissions or rights to use the data. The U.S. also has 7216 consent, go to jail provision that we also have to be sensitive to. So depending on what type of data that we're collecting, or it's tax return related data, there's an additional clause that we have in our agreements. But it's something that today it is kind of a mix. We have some clients that are saying, yes, I want you to be able to use my data to be able to give me insights. We have other ones that are saying no, like they're striking those clauses or modifying those clauses. And then we have some that's kind of a mix where it's like, I want you to share benchmarking data from your other clients, but I don't want to contribute my clients or my data. And then we have one of the projects I have going on right now is a private benchmarking study where we went out to a number of companies in a particular industry that all provided their data because they really want to see how they benchmark. So it's a little bit kind of all over the place. There is a lot of focus, and our general counsel is heavily involved. To make sure, like, have we captured the right language? Do we have the right permissions? Have we had the right discussions with our clients so they understand what's being used and how it's being used? And then we also kind of externally, we're seeing provisions like out of the EU, some of the guidelines around AI and data protection, where if you collect the data, but for like benchmarking, and then later a company said, I can't use my data, you have to be able to then go out and be able to pull their data out of the data set. So there's a lot of these discussions that are going on right now, and we're kind of all over on the spectrum is what I'm seeing.
Yeah. Yeah, all over is, I think, the right way. I think every organization has a lot of lawyers sitting here trying to think about this. And you have a lot of different clientele effects. We see probably the most, some of the most trades on the street. And so certain clients do not want us to put that into a model and for us to use it. Vice versa, some of the charts that I showed, we don't want to give those to vendors, and so they can use their own models to mine our IP. So it is a little bit of IP hoarding going on, and you share where it's a commercial opportunity. We are, some of our LLM vendors, we're basically taking their models and keeping everything in-house, and we're training it ourselves. And so it's a kind of a tug of war. Is we don't want to give that vendor our information so they can train, but we also want their model. So it's a little bit of a weird situation where it's a give and take.
So I think one question that just came to me, it's not on the pre-coin list, but it kind of goes to this taxation of IP versus, incentivizing companies to use IP. Do you see a world in which instead of taxing the biggest AI users, the big companies at the top, you're using things like a hyped R&D credit or, the FDII benefit like Todd had mentioned, or some other incentive to bring companies to the table and incentivize them to use AI and give them the tax credit like we've seen with eco credits, with like the electric vehicle credits, things like that?
Yeah, we're definitely, there's a global AI race that we're in. And one of the things I think is interesting, if we look at like traditional machine learning, China, as an example, had I think a kind of an advantage when it came to things like health information. So we saw a lot of advancements that were coming out of China in the health space because they don't have the same kind of HIPAA requirements that we have in the US. With generative AI, I think that's changed the equation a little bit because there's certain restrictions that China's placed on their models because of their government policies, that we don't have some of the same restrictions in the US. That's kind of created some equalization. And one of the things that I love about tax is that it's not just a numerical thing that we're doing, it's something that's used to drive the social agenda. Yeah, so to your point, could there be some incentives like that, coming from different country governments to try to be competitive in the AI space? And then you gave an example of like the research credit. Like, I think that's a fantastic example. Like, we're trying to incentivize more research being performed here in the US. So could that be something where there's an element of that related to AI? I definitely think so. Or we saw that with the CHIPS Act.
Right.
We want more semiconductor production in the US. Definitely.
Yeah, and I think just to balance that, like, again, to mention, I think it'd be good for the big players to start to, and I think they are, I know they are, thinking about what that future tax policy looks like. Again, there's Wall Street Journal article about utility bills going up 35%, right? And so it's real. I do think we think it's real. I think it's real. But, I think tax policy has a very large role here, and I think it's early days.
So then how should, law schools, law school classes, even undergraduate universities, how should professors be educating their students to come into this AI dominated field? I know we've talked about there's shifting, job decreases some places, but then you're seeing job increases in other pockets. What does the future look like, and how should we be preparing students to kind of come into that workforce?
Here, Todd, do you want to?
You want me to go first?
Yep. Sure. We can mix it up.
I thought about this. Again, I think accounting and tax, obviously, they're very interrelated. And I've had conversations with a few universities that I work with. I think it has to be a complete different mindset in terms of using the technology in the classroom. So when I first started accounting, well, one of the reasons I liked it, got in the profession, is that the professor would actually just get out the Wall Street Journal and go through an article, and how would you transact for that? So I almost think that's kind of like, how would you prompt? And maybe you have 15 students prompting, and like, let's critique. Where did it get wrong? And so it's that critical thinking that I actually think is going to elevate the productivity. And we need to use the tools in the classroom live on a daily basis and teach them how to prompt. That's literally what I'm doing with a person across the hall from me is, all right, well, how did you approach that problem? And then try to think those critical skills about trying to find where the AI is wrong and how to use it better. And maybe I need to add a persona where, hey, I am a UPitt law professor. This is how I'm approaching this, which is going to be very different from I'm a freshman. This is how I approach that, right? So I think just an evolution and exploration of creativity of how to prompt, and you doing that as a group would be like a pretty cool learning experience.
Yeah. I think when we think about like the tax research classes I had in school, they taught us how to, one professor that the exam was always different than what we learned in class. And it was always painful, but so it was open book tests, but the open book was the Internal Revenue Code. That was our open book. And it was always on something that he hadn't covered at all. It was one of my hardest classes, but also probably the most rewarding, because I learned a lot from that on how to do research. I was doing that research like during the exam. There were some long exams, but I learned a lot from that. And when I started in the profession, a lot of what I learned in school wasn't what I was doing day to day in work, but what school prepared me for was how to do the research. And I think to what the example Todd was giving, I think the way we do research, the healthy skepticism, the judgment, like that is really key. I was mentioned to Tony before this session started, but I had spoke on had a podcast that I did with an individual from Microsoft that he does a lot of research into how AI is being adopted and the impact. And I made a comment to him about, well, a lot of the younger generation, they're digital natives. This is going to be kind of natural to them. And he actually paused me. He said, what the studies are showing is that individuals that are good that have experience in training and developing teams, those people are much better at both prompting as well as evaluating the results that are returned by the generative AI. And that's something that I've used as we've tried to upskill the professionals, because I do kind of get sometimes from like our senior partners where it's kind of same thing, like that this is a young kid's game, not for me. And so I've tried to highlight that actually the skills that you've developed over the years of leading teams, training and providing instruction, that is really important. At the university level, I think there's an opportunity for a message for us here as well. I feel like for years the last number of years, we've been telling people you need to have more technology and digital skills in the future, which I think is true. But what's really evolved is understanding tax, understanding law, being able to apply that to real facts. Like that is the unique and valuable skill. And I'm hoping that we can kind of use this to help attract more people to the profession, because we have seen a decrease in enrollment in tax and accounting around the country. The kind of worrying statistic as well is if we look at companies, there's a lot of people that are retiring that are either retirement age today or will be retiring over the next 5 years. So in looking at like, is AI going to displace people? People like look to other careers because it's going to get displaced. We can, from the very first time that when I first started, there was the saying in tax, we always have to do more with less. And we're now 30 years into my career, and that's still the mantra. We have to do more with less. That continues. But we're kind of facing, I think, a challenge or crisis where we have an incredible amount of knowledge and experience that is soon to be retiring and leaving the industry. And we have record lows of individuals that are coming in. I view that actually the technology is something that will potentially help fill that gap. But at the university level, I think you're talking about kind of the opportunity training in some of the new skills. One of the other things that Tony and I talked about this as well was that I think part of the message is when you first came into the industry before, again, like myself, I should have been taking college classes on how to use the Xerox machine. That was the skill that I needed most over the first year or so of my career. And what we're seeing is AI is actually accelerating the experience for a lot of our staff. So they're able to be in more client conversations because they're having to do less of like the data entry. So that they're able to, it's kind of accelerating, getting to the point where they're actually applying the tax technical, the legal. They're able to do that at an earlier state because some of the other activity is going away. But I think that the critical part is training on that judgment. How do you ask the right questions and how do you evaluate the response?
When you first started when you first started your presentation, you talked about a tax court case where I think you said 6 of the sites were just made up.
Yeah, it wasn't tax related, but it was yeah, it was yeah.
Okay. But so these new students, they're all much younger. I have time. I can sit down and review what they've written and look at the cases that they've submitted. How in the profession, and you're out in the field, you don't have that kind of time. So how are you going to ensure that the younger employees come in are not relying on AI generated briefs or memos?
Well, I think one of the advances, I mean, there's a big push for transparency. But if you think about like ChatGPT, when it first released, there was no citation. So it would give you a response and no way to check the source. Today, if you use it, and this is really true across any of the platforms, that it will give you links to sources. So one of the things that we're doing in review, like with our staff, is the expectation is that they didn't just copy and paste, because the firm policy is back to the paper that you wrote, that we cannot rely on AI. So at nothing can go out the door without a human in the loop.
To answer your question, anyone who does that jeopardizes losing their job. I mean, because that's just sloppy.
Yeah.
Reviewing. And then, I mean, that just makes me nervous.
So that's right. So part of the way that we're working with the staff, and it's really not that different in kind of approach from before, but there is the second, third levels of review that we've had before. There's also the challenge if something comes in a lot of times, I mean, there's little kind of clues where you can see that this may have been AI generated. There's you yeah. But part of that feedback or training with the staff is asking what their process was. So like what did they check? Is if they're just copying and pasting, yet that's create risk. So we want to know, did they actually go check all the sources? Because there can be stuff where it gives you a response, it gives you a citation, and you look at the citation, you're like,
It's garbage.
yeah, it's not even, it's talking about something totally different, doesn't even.
And total time, you're still saving time and generating a better result.
What?
Going through all that process.
Yeah, because if you think about it with the, again, way a lot of like the research tools used to work, you would search on a topic, again, just like be like a Google search. You search on a topic and it would give you a list of all the relevant citations. And then you'd have to click on each one, you'd go read it, does it apply? And again, same thing with Google. You do a Google search, and initially it just give you all these links. So you would go click on each of the links, go out to the page, have to read it. Is this what I was searching for? Now with like the AI summary, it kind of summarizes the links. It gives you a summary of what it found. And then you can click on it to go verify and provide additional information. So it does save time because you're not having to do that step of like click and read, click and read. It kind of gives you the summary, and then you're able to more quickly go say, okay, that's what it said. Now I can verify. Did it really say that or not? Is the context the same or the right context? And come back, as opposed to having to do all that navigation and kind of consolidation yourself.
And I think AI doesn't replace human experience. I think that's kind of the theme across today. So if I hand a memo to my partner of 30 years and it's wildly off base, he's going to know within 3 paragraphs that it's wildly off base, right? Because he's been doing this for 30 years and he knows what code section and how the transaction works, et cetera, et cetera. And so I think we're never going to get to a place where our clients pay us to use AI for them. They're paying us for our human judgment, for us to make things make sense for them, for us to help them and be that human connection. The AI is just helping us do that in a more efficient way so that people are learning faster, professionals are getting better faster, and we're able to provide better advice, hopefully cheaper and more efficiently than we have in the past.
Yeah, I don't think it's a new problem. I think to your point, if you go on Google, it just takes longer to lift things and put things together. But that's been kind of like, I could go to SSRN and lift things from papers and mash it together. You can just do it quicker now, perhaps, but that skepticism hasn't really changed, in my opinion. At the end of the day, maybe it's just a better grammar check of what you lifted.
So law student here. Wow, that's loud. Law student here. If I ask this of anybody who's talking about AI, who's much more of a professional than I am, if you had somebody that you were advising who is 18 years old, would you advise them to go into the field with the coming job disruptions that you think AI would bring? So would you advise them to go into accounting?
Yeah, 100%. Yeah.
I'll second that or triple it.
Yeah.
If you're good, you're good.
Yeah, I'd kind of add to that, just kind of a couple things to that. I think as we've talked about, AI is trained on data. And so in like a scientific application of AI, our understanding of the scientific principles changes, but scientific law does not. So there's a lot more stability in kind of AI use against something in a scientific, medical field. I get bored really easy with things, and that's why tax is perfect for me, because you just have to, if you they say in some places, if you don't like the weather, wait 5 minutes. That's true in tax as well. It's constantly changing, and I think that's going to be one of the things that helps in our industry, helps the professional stay relevant. So until we get to somewhere where we have global consistency in the way that taxes approach, which I don't think we ever will, because we talked before, it's a way to incentivize certain social behavior. That's really, there's a revenue collection side of it, but really most of the tax law is around how you incent certain behaviors that we're trying to drive. And I don't see that as changing. So having the the skills to be able to understand and apply tax law to facts, I think is something that's going to continue or maybe even be more important of a skill than it has been historically. And this is something that's kind of played out as we've looked to. I do a lot of hiring of individuals that are not the traditional tax and lawyer as well, so data scientists and others that we're bringing into the organization. And a lot of like our talent leads, as I've talked to them, that they've talked about how we need to be competitive with like big tech to get talent, and I disagree with them. It's a very compelling reason to come into tax, and a lot of it is because of the kind of the change that we have going on. It's kind of an unexplored space, but we've been very successful at attracting talent, competing with big tech, even where something like the starting salaries at big tech is higher than what they would be in professional services.
Yeah, and I think the other kind of plug for the fact that we're not going anywhere as professionals, tax is very language specific. The code is very language specific. The way that we issue regulations, the way that the code is enacted, it is a function of the law. And so no matter, if you were paying attention with one big bill that just got enacted, there was a set of the code that the Senate proposed, there was a House proposed bill, and some of the changes that were in one form of the bill didn't actually get legislated. We had a client who actually did run a search, and she said, I think that the standard is properly applicable. Well, that was in one of the versions of the bill in one of the sections that didn't actually get enacted. And so the standard was actually slightly different. And so her question to us was, can you confirm which standard I should be applying? The AI can't tell her that. The AI wasn't able yet to differentiate from the sources. This was the version that got enacted. This was just one of the proposed versions. And so I think until we get somewhere far in the future, the AI isn't going to replace human judgment. It's not going to replace our ability to read the code and understand the difference between may and must, right? So I think that provides a lot of comfort to me as a tax professional that my job isn't going anywhere anytime soon. But that it is a growing market, that there's a lot of positions available in a lot of places to start from and be really successful in tax.
I think even the word you use there is positions is really important.
Yeah.
There's a lot of things when we look at like settlements with the IRS that there could be another driver that's not even really based on the rules. There may, often there's kind of some kind of horse trading that's going on to say, okay, we'll settle out this credit, we'll give here if you give there. So if you're using the data then to train AI, it's going to be confused because it's not, unless you load in those facts as well, it's trying to say I got two identical situations with different results. And again, it's because it's that application of law that differentiates like why you ended up with that result. So as a human going and reviewing it, if you have the context, you're going to know. And I guess the AI, if you fed it all that context, might know as well. But I think that's one of the things that having that human judgment is really probably more critical than ever in this profession.
Yeah, I just add, like, to your point, to reiterate, accounting policy and tax policy is always dynamic and always changing. Like even to what I was showing with this slide, we're seeing transactions now that we haven't seen. They might rhyme a little bit, but they're different. And so you have to have that judgment. I would also agree ChatGPT was terrible, the One Big Beautiful Bill Act. It could not differentiate between Section 199 and 199 Cap A. That was one of my favorite prompts. So it's, and then the last point I would just highlight, I think professional services, where we're not seeing the level of attrition that maybe people have thought, is because they're relationship businesses, right? And so you can have a tool that helps you move faster, but at the end of the day, it's a relationship business.
So if there's no other questions, I think we're a few minutes over 1 o'clock, so I'll turn it back over to Professor Hackney.
Big round of applause. Yeah, thank you everyone so much for coming. We really appreciate it, and particularly our panelists, Darren, Todd, and Jay, and Tony. And I hope you all have a great weekend. I'll take care. Oh, what's that? Oh.